Good morning, Vietnam and Vietnam Associates. Just getting it all set up here. The market will open in 30 seconds. And here we go. Where's the line? The line must be drawn here, no further. Oh, we're starting off with some negativity. Nothing too critical. At least not yet. Okay. Okay, I'm all set up. I'm ready to rock. So, a bit of a drop on the start. The volume is really low. So this is probably going to get erased. This is just panic, worry, whatever. So this might be a good buy the dip opportunity here. A little risky, but the volume doesn't say that there's any committal to this red. Well, you missed a pretty good horse race. You almost won, May. It was pretty damn close. Yeah, it's not too bad. So the volume right now is 8 mil. So we're getting a little bit more volume, but it's still not that bad. Okay. Do. Oh, let me just fix this. Transform, edit, transform. So I just dollar cost average down with my leftover money from yesterday. Okay. Okay, just give me 1 second to fix this top bar so it doesn't look like sin. Okay. Done and done. Done. Okay. It's 3 p.m. Why now 2 p.m.? Yeah. You keep trying to shift it on us, but and it's all market time anyways, so you can just write 3 p.m. if you want. Yeah, works. Good enough. All right. That's a good amount of emojis right there. It's already pinned. Oh yeah, I didn't want to delete yesterday's stuff. Put that back. Oh my god, letter by letter, really? So we broke the macro pennant, and we're on a higher velocity downtrend. All right. Still think we're going to push back up. Yeah, you don't have to tell me to pin it. I can see. It's only when there's a flood of text. It's all good. All right. 2-cent spread. Volume is still... volume's picked up a little. We're at 15 now, but it's still low. Let's take a quick look at the broader market. GME gapped up, but I think that's going to course correct, which is what it's doing right now, apparently. Where I think we're going to do the opposite. We overshot, and we're going to pull up. Although if GME crashes, it's going to drag us down. So it's going to delay our upswing. Yeah, I would expect us to at least try for the blue line. So it probably more likely would be somewhere here. We should be by 10:30 or so. If the line's been reduced, then at least here. We'll leave it at its original position. See what happens there. Clove is up 13%, yeah. It's looking decent. Gas is up. UK's not crashing. Now we just need the volume to pick up in the green direction. Looking at the second charts, green outnumbers red volume-wise, but red's moving the needle more. Okay. Sorry, I'm just reading an email here. I gotta fill out another psych form. Oh man. Okay, I have to do this form before August 3rd. Okay. Sorry, I just got medical insurance email. Finally. This is dated August 22nd, 2018. When is this? Oh, this is from 2018. Oh, geez. This is an old email. I was like, this ain't the new email. Let's see if it went to junk. Yep, there it is. Okay, still going red. Volume has picked up considerably in the last couple minutes. So that's not a good sign that this is going to stop. We're going to need some leveling out. Okay. Do. Okay, I'm still watching this. Just trying to fill out a PDF so I can get paid. Starting to level out. Okay. Done and dusted. Okay, one less thing to worry about. Excellent. All right, good. Starting to recover. What's the volume? Yeah, not bad. Volume's picking up a little bit. Yeah, we're moving at a decent clip. We're moving at about 80,000 every 5 seconds. This is the filled out form. This is the filled out form. All right. Okay, just responding to some emails that are well overdue. But health takes precedence. Okay, that's done. That's done. Viewership is not completely garbage. Excellent. All right. Oh, The Vice City is still here. I just haven't overkilled it. You still got the little image in the left there. Oh, you mean the color coding? Yeah, let me fix that. Color theme, Miami. There we go. Got it on standby. Yeah, we lost it when I had to fix it because the colors were screwing people up when I set it all to red. There's no green here, only tears. Yeah, definitely, Paul. 17%. Not bad. Oh, I took too long and logged out. God, I hate that automated timeout. You can't turn it off. It's like, for security purposes, we're just going to log you out like every half an hour. It's like, frig. There we go. Well, I'm thinking it's going to stabilize and try to grab that blue line and then probably continue downwards. But at 6%, I don't know if it's going to free fall. It has one more support line before it drops a good $20. So if we can avoid that, then we could probably get back to 54, 55, maybe higher. I think by the end of the week, we should be into the 40s at this rate. So right now I'm just looking at the volume, trying to gauge commitment. So there's not a lot of commitment to go down. Our volume is definitely higher on the green than the red. We'll see how this plays out. Oh, so answer your question, Zeus. I would wait for it to level out. Once it gets over the two white lines, it's probably a good buy. But right now, we're not out of the weeds. Well, if you have a stock you want me to look at, we can take a look at it, Paul. But I'm just riding AMC because it's volatile, right? You're at -6. It's probably going to go to -3%. So there's 3% you can make, right? If you make 5% consistently each day, you're beating everyone by like a factor of a gazillion who just put their money in and wait, right? The little wins add up to big wins. Yeah. And you don't need much, especially when you have a lot of money. So this is a good push. Volume is about quadruple. Yeah. Well, only reason I talked about Wish is if you look at this, Wish is the largest volume player right now, right? So Torchlight, Clove, Wish, and Elf. Like Elf just went up 38% and it's looks like it's on a run. That might be an easy snipe. I don't know anything about it though. But these are the ones that are, people are playing the most. Is Rocket even up here anymore? No. Yeah. Well, it's generally the problem when you jump in at if you jump into a stock that you know nothing about, it looks good for that second, but you don't know what you're jumping into, right? It's like jumping into a river and having no idea there's sharp rocks. You're like, well, it looks like water. Well, yeah, no shit, but you don't know what's underneath the surface. So that's why it pays to have a horse that you stick with, because at least you know the horse a little bit. Yeah, EENF. I like EENF, but I can't. My stock trading platform won't let me buy it, and I'm cried a little on the inside. I wonder actually if I use the professional tool if it'll let me buy EENF. Let me check. That's US, right? No, it's OTC. Okay. Wow, they went from positive to negative pretty fast. Jeez. Yeah, I like ENF since it's geez, they got a lot of volume. 25 mil. Yeah. It's not letting me. Yeah, it tells me it's an invalid um, symbol that I can't buy, which probably means my account's not set up for it. Oh, all right. Elf does like eating cats. EENF is EENF is gas exploration, and they found some good gas reserves, and they're drilling in proven gas reserve areas. So basically, it's just a matter of time before they hit something. And so the stock is a little inflated, but if you catch it, on one of its down days, and you hold it for any period of time, you're probably going to be rewarded. Gas is exploration for minerals and gas is like a giant friggin' gamble, much like pharmaceuticals. You either make it or you break it. At least with at least with minerals and gas, you could find something that has value. Whereas pharmaceuticals, it's generally make it or break it. You know, either it cures cancer, or it doesn't. Versus we found gold, just not a lot, right? Um, Now, pharmaceuticals, though, it's in their hands. If they do better, they can make it work, right? You can't just make gold appear. So there's that too. But anyways, so yeah, ENF. Somebody sent it my way a while ago, and I was like, oh, it's pretty decent. So I've been watching it since I'm unable to trade it. But I kind of like it for an OTC kind of. I think it's a sub penny stock. It's not bad. Well, gas as in not gas. Gas encompasses the whole industry of oil. Yeah. You don't drill for gas, you drill for oil. You can get gas from drilling, but generally you drill for oil. You could frack for natural gas, I guess. But usually that's a byproduct because nobody gives a shit about natural gas. There's so much of it, right? But anyways, yes, to be technical, it's oil. Yeah. Well, when you start taking those ludes, Dr. Overkill, you know, you can sleep for a while. Yeah. Well, that's hype for you, right? You know, you put $1 million on a hype, it either pays out or it doesn't. And if it does, you're done. You can walk away. One big score. One final score, and then I can retire. Hmm. Interesting. Yeah, the home retail market is definitely psychotic right now because houses are so expensive now. Anybody that's in the industry is getting lifted because there's more profits to be made if you take a percentage, right? So this one, if it completes, yeah, I would consider this a U shape and then it rolls, but it doesn't look like it's completing. There's a good chance it'll reattach itself to that blue line. Right now, it looks like it's avoiding it. Now, if this was the midpoint slowdown, we should be able to get double. So we should be able to go to about here, which is double this is probably here. So this is kind of a wrong place for a slowdown. So if I use proper measuring tools, right? So if we take this as the middle, right? Then we take this, we should be able to go to here. And then if I draw a horizontal line, they're pretty much the same. See how that works out? So if you don't collapse at the middle point, you'll probably go to the top of that square or close enough to it. Now that blue line's going to be in our way, and it'll probably grab it, and then it'll push over, so we won't get the full completion. But I don't think this is the point we're going down. Now it's possible that this was the completed U shape right here. So this wasn't the middle, but the top, right? Which is basically this. But in that case, it should have rolled, right? In this case, it ran some more. So that makes it look like it's going to go for this guy as it's going to keep going. Treated that as a middle. And this is looking like it confirms it. See if we can get over these guys and we'll go for a run. So if you bought in on this dip, you're now up 2 and a bit % at least. You're currently up 4.5%. And when this is all over, you'll be up 6.4%. Hopefully. Let's not count chickens before they hatch. Our volume is slowing down, but it's still pretty fast. Much faster than it was around 10 o'clock for sure. So this is showing commitment, which is good because there's commitment in the green, where there was no commitment in the red, which is good. And that was what I was early speculating about. The volume didn't show commitment. So even though we're seeing bad red, it was not, you know, angry, mad, hateful red. It was just meh red. So a turnaround was inevitable. So as long as we maintain this volume for the green, we'll keep going up. Then we're going to hit some technical point where it's going to be like, this is too much. Green's going to slow down and red's going to take over. But we can cross that bridge when it happens. At least these days I get to do some good technicals versus the sideways doing nothing days. Yeah. So that's just a channel for my reference. Doesn't mean anything. And just because I'm going to get rid of this blue square, I'm going to put the line where the blue square ends, which is here. Oh, it's almost like I know what I'm doing. Just a little. Per. So that didn't touch yet. I think we'll still be able to touch the line. The least. Oh, actually we did. We touched the white line. I had to kind of lean in there. The blue line is just a continuation from yesterday. So if you see yesterday, there was an angle that's prevalent. See? Everywhere. And that represents basically the draining of the swamp. And so that blue line is an overarching slow drain or slow bleed in the background. So when everything slows down, we should follow that blue line. I'll have to move it around, but we're going to follow that angle. At least until the personality shifts. Well, yeah, the stock's personality shifts. It's gone through quite a few personalities in the last week, 2 weeks. It was depressed. It was sleepy. It gave up on life. It did a lot of cocaine. It was a superstar for 2 days. Crashed, recovered, crashed. Now it's bleeding out on the pavement. So, you know, it's lived a lot. Yep. Draining that swamp. I like to, you know, spice up my references. Pick random shit. Keep you on your toes. Yeah. So now that we touch the top, right? So now we're over the line. We've completed it. Now we're probably going to go sideways for about 3 or 4 minutes, just because we have to establish ourselves over the completed U shape. You generally don't gun it after you complete a U shape. It's possible, but usually it has a period of roll. This may have been it, but I don't think it is. So I'm expecting this to at least get pushed back considerably. Oh, hey, it's Zach. Nice. Yeah. So Zach is such a spammer that you can't see him unless you select live chat. Poor Zach. YouTube has made you. Oh, I guess you said piece of shit. That's probably probably why it stopped you from showing up. For those that are new, Zach is our resident troll. He gives out $5 handies at AMC. He's been wishing AMC to be $5 for probably 3 months now. It was great. Yep, Zach is here. He made a visit. So there's the slap down. I expect it to be a little bit bigger. So if it doesn't get any bigger, then we're just kind of delaying the inevitable, and we'll have a large red after some green. If we can get the red now, then we should continue the run. Yeah. Oh, and thank you for the sub. I don't know how to put your last name in there, but Taufaiti? Okay, so there's your normal retraction kind of deal. Your cup in your handle, as some people put it. So 1 more minute of reddish, and then green can start to take over. Oh, let's see what. Going, yeah, it's going vertical. How much is that? 17%, 16 and a half. Oof. Not bad. Okay, so there's your 3 minutes of red or so. So then now we should have green, because those reds weren't severe. So it just shakes out the profit takers and shakes out whatevs. It doesn't friggin' matter. We're still above the line. So we're above the support line. That's good. We're also above the channel line, which is good too. Ugh. Oh, I got to write a note to call up Denny's about a sponsorship. I really want to promote Denny's. We've all agreed that Denny's is a good choice. I was like, why is it up there on the thing? I should write a note before I forget, like for a 50th time. So we should be seeing green somewhere here. I'll be right back. Oh, that took a lot less time than I thought it would. Actually, I think I already looked up Clorox. They don't sponsor anything unless it's local to their stuff. But I should send them a letter anyways, because if they're working with AMC, if it can keep AMC clean, think of what it would do to your insides. Bleach, not just for cleaning floors, but for cleaning life. And then the guy's scrubbing away blood stains. Does murder get you down? Yeah, it does me too. But that's why I trust Clorox bleach. When I'm running from the feds, I only trust the strength of Clorox. Don't be fooled by imitators. You'll get caught with clean hands. This floor is the cleanest I've ever seen it. You're here to find the body, but the floor's so clean. High fives, laser lights, 80s commercial. Yeah, we don't have Denny's or IHOP in Canada. Okay. Damn it, Jim. It's good. It's all good. But hashtag marketing, yeah. I would kill for a lumberjack breakfast. Hey, we can merge them. Do you want to kill for that lumberjack breakfast? Well, if you do, Clorox is here. Oh, there is IHOP across in British. Okay. Oh, actually, yeah, someone mentioned that in Vancouver. There's a lot of American chains. Actually, yeah, you're right. Same with Long John Silver's and might be an Olive Garden. Yeah. Yeah, you're right. I think someone mentioned that. Yeah. Because I was like, man. And then they're like, oh, yeah, but when I was in BC, I hit all these. And I was like, oh, interesting. That's a good push. What's the volume? Woo. We're at 50 mil now. Yeah, we're picking up the speed. Stepping on the gas. So you see there's the red, and then green took over. Now, green could have taken over like a minute earlier. Instead of being 4 minutes of red, it could have been 3 or 2. Generally, with this much height, 3 minutes of red would be adequate for our stock. But you see how it kind of leveled out and then it jumped? That's how things work. Like, if you need that leveling out first, it generally doesn't just 360 or 180. Sorry, 360 would put you back where you were. It doesn't generally 180. So here, you see how it just kind of jumped. So that's a little too much too quick. We kind of need a medium green in here. And that's why red kind of was able to slap them down. They basically went up, touched a new resistance line, and flew too close to the sun too quickly. So as long as green doesn't get decimated by that reversal, because now all the buyers have been knocked out for a few seconds, if green continues to show some strength and builds their floor just a little bit, then we'll finally attempt that line and get over it. Now, of course, on psychotic, ridiculous days like that 100% day, that's why I was going like, holy crap, because it was basically nonstop buy-in. So where you should have weakness, there was none. And where you should have strength, there was too much. And it was just nonstop. So on those days, you just buckle up your seatbelt and go for the drive because it's just incredible volume, right? But today we're actually low to medium. I'd say medium low. We're picking up, but we're definitely low volume. So, or lower volume. So now then more of the technicals come through because there's less psychoticness on the sellers and the buyers. So Now we are coming up on 10:30. I just noticed. So we might get pulled down in the next 3 minutes. Hopefully this line will support us, stop us from going down. But we'll see. So far it doesn't look like it's doing much. But green is not doing much. It's just straight red right now. There's a push from green. Yeah, so green was kind of waiting there. So it gave red about 5, 10, 15, 40 seconds to just free run. Now green is pushing back. So people are trying to time the dips again. So they let it run. So it ends up being a bigger, worse than it should be. And then green decides at some point, yeah, turn it around and to try to ride the dip. Where this fails, though, is if it doesn't go up enough, they immediately become sellers. So even though they push the red back, if they don't see immediate gains, then you're going to watch this red just going to suddenly jump because the people that push that up are going to bail. See? Like fucking clockwork. So they're kind of your fake friends. They're just there for, a short period. So what we need is a leveling out, a stability, so we can start to go up again. If the buyers didn't try to push it up for a quick grab, the red would have ran to about where we are now, but then they would use all their green power together at this point. And then because it's showing strength, everyone would pile in, right? So it's a little bit of gaming the system, but you as a player in that system have to preempt that. So if you see that they're not going to get what they want, you got to get out before they do, if you got in before them, right? Because, they're going to react, but you got to react to before they react. You got to precog that shit. But overall, as long as these reds don't get massive, they're going to keep trying to push it up. So I think we're going to see some upwards motions soon. But those reds were just overkill. They shouldn't have been so big. The last, let's say the last 3. Volume's up another 3 million. We're slowing down a little bit. We're about 40,000 every 5 seconds. No, there's no D's in Canada that I know of. The room seems flat. Well done, Triple X. With 1 capital. But the D's Nuts Corporation doesn't ship to Canada. It's mostly an American thing. We got Joe's Traders now. But that's only because of Walmart. Yeah, so this is showing more weakness than it needs to. it's not as predict. It's somewhat predictable. You know, you had a decrease in volume, so this is predictable. These are a little too big, but it doesn't matter if I think they're supposed to be small. It's because I'm expecting an upswing, right? The fact that they're bigger means something's changed, or, you know, the people that are doing what they're doing decided one way or another. It doesn't really matter. It still doesn't look like it's going down. It's just these were elongated because extra negativity or whatever. Like, I can't read into their minds. It doesn't matter. Even if I could, it doesn't matter. So the extra negativity is not a good sign, but it's not critical. So we just have to wait. Gotta have patience. All right. And I bet you this blue line, which we didn't latch to, yeah, pretty much this guy here. But if I move it to the top, let's see if it will latch to that. Yeah, volume is slowing down. We're now at 20,000. So we're getting bursts into the 60,000s every 5 seconds, but we're rolling around 20,000 now or less. So when we slow down, we generally go red because green's basically waiting to find a price point to get in. And then when it levels out, red slows down a bit, then green usually jumps in and drives it up. Those are two heavy reds right there. Followed by a weak green. That's not good. Come on. We need those buyers to pick up. Nope. They're holding back the red, but they're not making any ground. Volume's gone up. So green is fighting, just not getting any ground. So eventually red's going to run out of sellers if green just keeps this up. Usually green would give up before red, but we can be hopeful here. Oh, that's some good green. And someone just hit a red bomb. Someone gobbled that right up. Om nom nom. Red crayons. Come on, green. Friggin' push. Green's just holding the line, but they're not pushing. You can see in the second chart how flat green is. There's a big buy-in. Red's not countering. This might be it. Ugh. And it fizzles out. Because, yeah, when you have a green push and then red basically goes neutral, then that gives green the next indication to push. And then it had 3 greens, all of them flat. It's like, son of a bitch. Yeah, looks like red's in control, at least for the short period. Low volume. So green's still dropping the bigger volume, but they're giving up. This is ramping up volume. Red's trying to counter. That's a buy-in. Maybe a push. Volume's going up. Just need red to get out of the way. Eventually, red's going to let it run so that they can scalp the top. Because right now we're not overwhelming red. Well, in some cases we are, but for the most part, red and green are taking turns. Green gets out of the way of red, lets red go. Then green tries to push. Red tries to stop it. Green overwhelms it. Red gets out of the way. Then green gets to run for a tiny bit until it fizzles out, and then red takes over again. So that's indicative of gaming. People are basically buying low, selling high, but it's the same people over and over again, or a similar group. Yeah. In the background, we probably have that slow drain still going on, but there's definitely gamification here right now. In a stock that's not being gamed, you have a general trend that probably goes the entire day, and it usually is more indicative of the market. So as money flows into the market, you end up getting lifted or sunk as the tide goes up or down. This might be a breakout. Volume's cranking up on green. And red just slammed with equal. Oh, so much for that. But yeah, if red could just disappear for probably a couple minutes, we should be able to get a run here. Yeah, I'm just looking at the seconds chart here. It's definitely they're duking it out. And the volume's going anywhere between 40,000, 60,000, and 20,000 a second. So full tilt, half tilt, and a third. Well, I guess we're going sub 20. So yeah, it's full tilt and half tilt is most of them. Yeah, because 30,000 would be half. So we never got a 1030 dip, and we barely got a 1040 dip. So this might be our 1040 dip. Because eventually we're going to have our run up as we get power post 1050. How's the market looking? Good, okay, bad. Yeah, we should be getting our green soon. Okay, let's take a bigger look. So we got a channel here. Might as well just duplicate this. Okay. I wonder if this will be the uptick. Let's see. The volume is leveling out. So is the share price. Oh, comfy couch is comfy. Just let this baby ride out. So we really only got that one message from Zach. He just came in and told me to stop day trading and then left. That was disappointing. I'm just going to post it on Discord so we have a record of this memory.
There we go. Preserving our history. I mean, we've been at this for what, 6 months? Yeah, at least he calls once in a while. Calls home. You just need him to come for holidays and I don't know, whatever. Visit us when we're in a home. Yeah. So we're going. I figured some type of line like this, just because you can see here as I move the line, there's kind of this shape. So I don't know how long it's going to hold, but I think that's the up line, and this is the down line. These are our kind of our two trending lines, and the rest of it is kind of the in between as we go from one line to another. And I bet if I take that gray line and I move it back to yesterday, I'll probably match a little bit. Since we've been very channely for, I guess, well, about a week. Let's get a magic lemon in here. For those that are new, our side business is running a cult of lemons, since for some reason these lemons are quite magical and drive the stock price up. Every time we doubt them, they end up pulling magic out of their pooper. It'll take a minute for the citrus to seep into the stock. Powell's being brought to Capitol Hill. Actually, I was meaning to mention that. So Powell is going to Capitol Hill to talk about the hyperinflation of stocks, I believe. All this gaming and memeing of them, if I remember the article right. You can quickly Google it, but yeah, I was meaning to mention that. Because he'll remark on it, right? And if he remarks on it, he might say something like, fuck these guys, or more regulation, or AMC, YOLO. Who knows, right? And it's actually hard to tell whether it'll be bad or good. Yeah. Because even if he says more regulation, which is ultimately bad, Redditors will take it as we won, pile in, right? It's like, I'm strangling the market to death. Okay, but at least now the market's less volatile. We win, pile in. So it's like, I can't see how, no matter what he says, it's going to be positive for us. So, all right, 3:00. We'll fire it up. 3:00 Eastern Standard, right? So, yeah, it's kind of how it is. So, because yeah, ultimately regulation kills markets. Just ask the Soviets or China or anyone else with a centralized market. You just choke it to death with inefficiencies. But of course, if it's too much of a Wild West, then you're prone to abuse but you got to find that line. Yeah, the lemon tends to work. Yeah. I generally don't bring out the lemons on really, really bad days. I reserve their magic when they can actually work a little. Yeah, let's shift this lemon up. Let's get it closer to the workspace. Yeah, there was that one time we put down lemons and the volume like quadrupled. And I was like, what? The timing on that was so good. It was like, meh, meh. It's going down, going down. We put a couple of lemons. 2 minutes later, it's like vertical line goes right off the screen. It's like, well, that worked. And the nice thing too, I'd be doing this by myself and having fun, but at least now I get to share those experiences when they happen. I can be like, remember when? Versus just, I'm laughing to the walls are my friends. Hello, wall. Remember the good times we had last week, wall? Oh, I get it. Strong and silent. Mm-hmm. So now we're in a mini pennant. Just going to have to shift the lemon down so I can see it. But there's a little mini pennant. So this is technically a breakdown if it doesn't get pushed back. Let's just get that lemon in there. Zesty goodness. Get it all up in his air. Just needs a straw, that's all. Oh. Maybe I need to get this a little bit bigger. It needs a little more citrus to turn this tide around. Maybe it's not zesty enough. So we'll shift this line up here. And we'll bring this line to this one. So this is its trend line here. There's also, oops, do not want to move those. There's also one here, this guy. And where I just moved it is these guys. So there's technically 3. You know what? Cost me nothing to clone. There you go. Now you don't have to visualize. It's all there for you. Oh, this lemon's not doing it. Gonna have to get more. Acquires more citrus. Get the lemon trinity going. And if it gets real bad, we'll start summoning demons. Oh, I can't see. There we go. There, the lemon Triforce. Because who hasn't played Link? Okay, I'm going to have to wiggle it over here. Up. And rotate is here. All right. Give that a minute or two. It's in-channel lemon. That was not intentional. There, we packed it full of lemons. Oh, well, I guess you're so young at heart, Stacy, that you didn't play. It's Zelda. Link is the character in Zelda, which anyone that's 35 and under grew up with. Well, most of us at least. Most commonly, it's this symbol here. And that's the Triforce. Power, courage, and wisdom. Yeah. But, yeah, it's all good. It's all good. It was a defining game of the 1995, 6, 8. Yeah. Definitely, maybe even 92, actually. Yeah. Yeah, you're going back to that far because, yeah, I transitioned off the SNES into PC gaming, especially when the internet hit. Oh, man. Playing Diablo Online was so good. StarCraft was great, too. BattleNet. Ah, those are the days. I haven't seen Breath of the Wild 2 yet, no. But I can kind of guess where it is. Yeah, I graduated high school in 2008. Doesn't sound right. I started in 2001. So it's 4 years later. So 2005, I guess. Yeah, and I'm 32, possibly 34. I don't really keep track. The census informed me I was old, and I was like, wait, what? Oh, wait, actually, I think you guys did my birth. It's actually 33. I'm in between. Yeah. Yeah, we had this conversation a few times before. Yeah. The citrus needs to get into this stock so we can start getting rich. Too much sideways trending. Perhaps I should coax it along with perhaps a lovely scenic drawing. I want to draw a lovely stock tree with okay. Nah. Aside from my health dropping due to, I guess, years of caffeine abuse and I don't know, birth defect. Um, other than that, no, nothing's changed since I would say 23. Like once you get the confidence that you're doing things right, then you're good to go. So after getting out of college, it's like, now it's like, oh man, this world's so simple. Because you finally pick up all the stuff no one freaking teaches you. It's like, I should have ate my vegetables. Some happy little trees. Happy little stock cloud. A really bad drawing of a Lambo. Look at that Lamborghini. Oh, yeah. I'll draw some retro lines. Yep. Yeah, as the old adage goes, only a fool thinks he knows everything. The smart person realizes he knows nothing. Now that's an oversimplification, but the general philosophy is right. It's like, yeah, you know everything except quantum science, what's behind those stars, you know. But there's a lot of human made stuff that we can completely master. You can be a master at taxes. You can be a master of mathematics. Anything that's human made can be mastered. Yeah. But of course, the person saying that quote is, I believe, late Middle Ages. And of course, you know, he's trying to be all smart. It's like, yeah, well, there's a lot you don't know. Yeah. Yeah, Tom's a youngin'. Tom's the age of my sister, I think. She's 92. Oh, if that's directed at me, Travis, yeah. No, nothing's changed in my older age aside from this health issue that just cropped up. You know, people treat you differently. You know, they think you're wiser and smarter. They trust you more. But my knowledge of anything is the exact same as when I was 25. You know, actually, if anything, I'm a little more rusty on human psychology. And I forgot most of my geography. But that's also health related, fries my brain kind of. So it's like, you know, ageism is a big thing. People are like, oh, an 18-year-old, treat him like he's retarded. And it's like, fuck you. I can run circles around you. Now I'm 32 and I still run circles around you, old man. You know, you've aged and not gained anything. I haven't gained anything, but I'm the same guy, but all of a sudden I'm trustworthy. So life has gotten easier in that case. I can convince people easier. I can lean into them and they'll believe me more than, 18, 12-year-old me. It's like, And I think when you get older, then it's going to go full circle. Then they're going to be like, okay, old man. Then it's like, So, haven't got there yet, though. Yeah. Yeah. Well, you gain more experience. There's a lot of things where, I'm correct, but the way I'm describing it doesn't fit their frame of reference. And so they see it as it's wrong because it doesn't line up with what they know. And then as you get older, you end up aligning your frame of reference to the people around you because you have more time. You're a sum of your experience, right? So then you know how to reach them because you're speaking their language more or less, right? But you're not changing what you're saying. You're just, or the content of what you're saying. You're just changing the delivery. Yeah. So, and that's the more annoying part. Like I've been teaching people human psych since I was like, I don't know, 16, 15, and it hasn't changed. Like human psychology, we've just figured out more and we've refined our statements, but it hasn't changed much. And so it's like, oh, well, 15-year-old me was dumb. And now 30-year-old me saying the exact same thing is less dumb. And it just gets quite annoying because I'm like, fuck you. It took you 15 years to realize. Yeah. But anyways, just stick to your guns, make sure you're right, trust but verify, validate yourself, and then just roll with it. They'll catch up eventually. But yeah, that's probably the best part about getting older. Yeah. Yeah, the average marriage age is now 32, I believe. It drifts every year. But judging by Tom's name, it probably was a shotgun wedding. The guy showed up, said either marry her or shotgun. And, there was banjos and all that sort of stuff. This is what I'm envisioning. Guy playing the jug. Woom, woom, woom. Nicely, Tom. Nicely done. And for that, you get put in the corner. And you can have this Pope hat. It says dunce on it. uh, there, Sam's looking for some high fives. So we're still trending along here. Hoping we get some level outs. Unfortunately, nothing so far. Shift these lemons over. Get this up. Get the citrus back. Oh, if Tom wasn't being facetious, then I just crapped all over his religious values. Sorry in advance. Oh, and in advance for anyone else who's staunchly religious, you are not going to like me. But luckily, we don't have to go down that road because it's the stock market. Oh, someone was not being facetious. All right. Well, good to know. Come on, come on. Oh, yeah. If you took offense, I would only care just because it's you. But I don't care if you take offense because of your beliefs. That's your problem. But I don't want to offend you as a person. So, yeah, it's good. Good, good, good. Good. Yeah, I was like, that's a little bit overkill statement, but perhaps you're going down that road. I don't know you. You could be chugging the margaritas. Oh man, I'm clicking everything but the one I want. Come on. There. Now let's see if I can rotate it. Here, 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 here. Where the hell's the rotator? Nope. This one? That one. There we go. No, citrus is not seeping in. We have developed a strain of red that's citrus resistant. Gonna have to summon a dark portal soon. Barry's our resident Redditor. Look, it just wanted to chill with the Lambos. Where were we? We're still up. So we're passing the white line. At least we're at the top channel for now. So we're at the position where we could do a run up. So 11 should have gave us a push, and you see there's a little bit of run up on the green there. But that didn't last. So we have to generally get all our height before 12 o'clock. So we should, if things go our way, do something like this leading into 12. If things don't go our way, we're going to punch through here, and we're going to continue on our merry way in one of the lower channels. then things will get a little dark. If we're going to make a giant W, we're going down to 5111. I don't think we're going to go that low. We've tried 3 times to go up. So I think one of these is going to take. Markets are all green. So there's, and GME, which was not doing so well, has leveled out. Where? Oh, there they are. Yeah, they've leveled out. So I think we should start going up soon. We're just going to go into a giant U shape. Generally, whenever you have a U shape, you also have a pennant. So you do have a bottom and you do have tops. But because this bottom keeps getting lower and lower, I'd be hesitant to draw a pennant until it levels out. So right now it's not indecision. It's going down with attempts. But as soon as it levels out and starts going up, then we can draw a pennant. And then we can find out where the breakout's going to be. But until then, we are literally traveling the blue line. I would not jump in, no. Not until it levels out. Still hasn't leveled out. This was the closest we got to leveling out, which brought us from the lower channel to the top channel. But we need to level out again and get out of the channel. But I may have to summon the dark arts. Get this stock to turn around. We could sacrifice a Lambo. All right, we'll sacrifice the Lambo. Okay. All right, let's start summoning. When all else fails. All right. See if I can turn this around. Oh, I'm going to have to shift this all over so that it intersects. There we go. Okay. Let's sacrifice that Lambo. Goodbye, Lambo. Poorly drawn Lambo. All right. We'll spawn some lemon demons. go. All right. Get some magic going here. Well, we got a red that's going upwards. That's a good sign. All right, come on, Demon Portal. Turn this upside down. Open link in a new window. Well, within 2 paragraphs, it says this got me jacked. They're going on the T35 true cycle. So starting with and going on it, moving on. Yeah, it allows for 1 hour margin calls. Doesn't guarantee it. In which it may collect supplemental liquidity deposits to each business day based on daily calculations. Yeah, it's a T0, but it's a may, not a guaranteed. Yeah. And a margin call does not mean it's immediate. It just means you're being called. The action of it and the warning are the same name, but it doesn't mean it's murder. And let's see here. So then he speculates. But remember, you can always do liquidity swaps, right? You can borrow money from whoever to raise liquidity, and then you just give it back. So he's just going to go on. Well, that's not bad. So it gives them 2 business days to make sure their liquidity matches their highest need over a 24-hour period or 24-month period, 2-year period. No, and then he just rambles on. So he's speculating the drop had everything to do with monthly liquidity. Then he's justifying that it's only going up which can then lead to this. Well, at least it didn't say only. It's not too bad. And he's not wrong. The end of the quarter is definitely when the system gets strained because they have to report their balance sheets and they got to make them look good. And that's a definite thing that they do. So all the banks and all the hedge funds, they try to spice things up just before it goes out the door. That is true. And then he's predicting the quarter end is going to be in strong conditions to go up. So yeah, it's kind of wishy-washy, but it's not too out to lunch. It's basically saying that they have to play better, and when they don't, they're going to hurt faster. But that doesn't guarantee anything. Yeah. It has the discretion to ask for more liquidity at any time based on the daily movements of prices. Yeah, at its discretion. So it's not a nothing. Yeah. Yeah. Well, I think I covered your response there, but no, I just quickly skimmed. Like I read it. Uh, I wouldn't say skimmed it. I read it real fast, but all it's getting at is they're seeing a time cycle based on market events, and but you see how they can move the goalpost within 3 or 4 days. I don't know based on GME. I know AMC, a lot of those were not, market events, but more technicals and breakdowns because of overall sentiment. Now, sentiment can change because institutionals or whatever have to meet requirements. And that part where they're talking about the time cycles can work. But with AMC, it's 80% held by retail. So 10%, which is held by institutionals and others, is enough to tank the stock when you have 80% of the stock's volume is retail. Or I shouldn't say volume, I should say ownership. The volume is probably 10 active investors with $1 million bank accounts. And they would be affected potentially by this, right? So there is some truth in it, but I think it's a bit of a stretch to be like, correlation, causation, just because it doesn't quite line up. But we can revisit it in, a month, by the end of the month. If he's right, he's right. But I wouldn't bet my house on it. At least in the case of AMC. I don't know about GME. We do follow very similar patterns. Like, see, GME is doing what we're doing, right? Coasting down, now going up. Coasting down, now going up. Like we're quite similar. We're just a little less extreme. Usually. Well, it looks like our portal to hell is working. Trusty portal to hell. Only failed us once. The lemon triforce wasn't strong enough. But demons. That's the ticket. right, good push. Oh, I'm gonna quickly use the washroom while this is going up, and hopefully it stays up. Thing she said. All right. So just trucking sideways. Oh. So hopefully we're just resting and pining for the fjords. Then we'll work up the courage for our next push. We're coming up on 12 o'clock though, so we got to get this done soon before the afternoon drain starts to kick in. You might get lucky in the 12 to 1 o'clock slowdown. Might get rid of red. Yeah, it's hard to tell. Oh, let me get the seconds chart up. You can see how that plays out. Yeah, the volume's pretty low. We're looking at less than 10,000 every 5 seconds. Yeah, we can quickly look at ELF. Yeah, ELF is up 77%, if I'm seeing that right. So when we last left it, it was here. Holy crap. Wish is leveling out. There's pump, and this looks like dump. Clove's probably going to do the same thing. God, these people just like pumping. Like, how much they pump, and they dump, and dump, and dump, and dump, and dump, then pump, and guess what's going to happen? It's like, yeah. I think we're still the best performing meme stock. Yeah. There's your triple D, 26%. Can I sort? No, it won't let me. We should have a big loser here. 12%. So no, it's generally all green. 10, 75% on Elf. Holy crap. Looked like Elf's gonna go for 100% day. I don't know anything about it. Does it have any it just opened this month. Oh my god. So it went from $3 to 13. Oh, that's going to come down hard. So this opened up in May. At the end of May. Nope, start of May, sorry. And then it caught wind on the 14th. Fuck, look at it go. That's not going to hold, though. That jump wasn't paid for. This is paid for. This is paid for. It's leveled out. Goes up. Levels out. Yeah, so that's a good springboard. Yeah. So you run this gap, but this leveling out is building a base, because that's how many days? 6. Oh, that's only 3 days. It's not that long. Yeah, this can get erased real fast. Shit. But until then, well, some people are getting filthy rich. Jeez. Here we are. We're summoning demons in an attempt to keep a stock from going to hells. Looks like it's working. No, summoning demons. That's our last ditch effort to make the stock go up. By what context, backstop? Oh, I see. Well, here, I'll let this run its course. I don't want to delete. Not that I'm superstitious, but I don't want to delete our portal to hell. So yeah, we're in a pennant, right? Of sorts, which is those green lines you see. And so there is stabilization here, and there's stabilization here. But you can see, like, look at how long we had to build a base before we did a run up, right? So I think we need a lot longer than, a couple of weeks to launch. Now we could launch from here, right? But that's only if we don't have any negativity, right? Nothing, haunts us. Because if something does, then it's going to end up like this. You jump up and then something bad happens and then you stutter, collapse, and fall down. So I still think we're in this pattern. It's now just being elongated. So this is our 100% day. This is shortly after it. And we're now in somewhere in here. So we're going to go up a bit, but we're going to roll. We just haven't quite rolled enough. So if you remember that shape and now look at this, right? We go up, we go down, we go back up. We're going over, and then here's the roll, right? So I think we might be able to eke out another up, but then I think over the longer term, we're going to poop down, which is why I took out that giant put. So I don't think we're going to climb up to the moon again, but all things are possible. Geez, this does look like Tom War's drawings. Okay. Yeah. The stock market doesn't get detached from the fundamentals for long. It's not like it just says goodbye. It's more it ignores it and then it catches up with it. So it's as I say, defying gravity. So you can defy gravity like an airplane, but eventually once your engine's cut out, then gravity quickly reminds you that it's there, right? So Elf is going to go through that. Like, we can talk about this probably in 2 days and we'll see Elf just plummet into oblivion, right? Because it's going up on FOMO, hype, and exuberation. But as soon as those engines cut, it's it's going nuclear, right? So AMC just has a lot of I guess entrenched buyers. So even though we should go nuclear, they keep propping us up. And so that kind of changes the game a bit. So, our engines spur to life. Every time we try to nosedive, they just eke out a little bit to stop us. But eventually either the engines are going to fully give out or gravity is just going to fuck off for a bit. But gravity doesn't. So the engines have to either kick in hard or we're going to keep bleeding out. But we'll see. We will see. All right, so we're testing this line still. Let's relocate the demon so we can see what's going on. All right. Oh, forgot your horns. My bad. Yeah, well, it's in the other adage is fundamentals always win out. You know, people argue like, you know, no, fundamentals don't matter, blah blah blah, and it's like on a long enough time frame, fundamentals always win. Always. Yeah. It's just temporary hype distorts them. And so fundamentals represent gravity basically in this case. And that's the same thing for a stock that's underevaluated. So AMC in December, right? Its fundamentals changed. So it was a circle in the drain and it was almost bankrupt with a ton of debt, right? But that shifted because people decided they're going to dump their life savings into the company and resurrect it from the grave. And so the fundamentals then say, oh, you're worth more than you are now. Now the market is quick to correct in that direction, but all the people that were short selling, they're like, no, they're wrong, right? They got punished by, I guess, inverted gravity. The fundamentals shifted to the positive, gravity shifted, and they got fucked. And a few of them went under, right? But now that we're 53 and we should be somewhere around maybe 16, 20, we're the ones that are going to get dinged by gravity eventually. But you can see, like here, people are willing to gas it. And as long as they're willing to gas it, we're going to go up. So it definitely makes it a little bit more interesting to predict. Yeah. Although I'm really like, we should have been where we are now here. So we kind of just took a little bit of a sleepy time rest here. But this is where we should have been back at 1050. But we overdid it. And I think that just set us on a course of following that blue line. So now we've had 3 good pushes. So that drags us up. And we might continue to follow the blue line. But now up here, right? Because you see there's the blue line. There's the blue line again. So we're definitely like bleeding out at a set speed, whatever this blue line represents. But green is then in bursts of energy getting us somewhere else. Yeah. So there, that illustrates there's your new channel. See how that works? So it's following the channel, gets pushed. It's following the channel, gets pushed. Following the channel, hopefully gets pushed. But that's the same slope over and over and over and over again. And that's this slope and that slope and that slope and this one. So there's definitely this slow bleed out. But that doesn't mean we're going to die because we just keep pumping blood back in. Now, if we could close the hole, but I think we're at 53. So it's irrational to think that we're going to close the hole at this height. If we were at 13 or 14, I would buy in with every cent, penny, house, vehicle, whatever you got, right? But at this, we're just fighting gravity. So, we'll see. We'll see how it plays out. But we just have to keep that in mind that, any day now we can go south. We're well overdue for a revisitation. And GME is following their trend line. So not bad. That looks like hesitation. They're probably waiting till 3 o'clock. So that's when you see something like this. So the market corrects, gets to a point, levels out, and then like literally almost goes flat. That's usually because it's waiting for a news article. So this is like the pricing in point. And then this is all of it just kind of, there's a little bit of wiggle afterwards, which is this here. And then it finds its equilibrium and then basically just goes flat. And then that's your indication that there's something it's anticipating. So we know there's a news conference, but if you didn't know, this would be a heads up. Yeah, where this you couldn't tell. It looks like it's run up and now it's correcting. That looks like anticipation, and that's anticipation as well, but the NASDAQ is prone to flats like this. Like I can find another one right there, see? And right there. So if I didn't have any knowledge, I'd just figure it's be more of these, right? Because yeah, the NASDAQ 100, I see that kind of flat all the time. Not so much in the S&P though. The S&P tends to be much more jaggedy. See? Like a little more, yeah. Anyways, that's why it pays to know know the personality of your stocks and your indexes and stuff. So you know when something's up. And let's get rid of this. Whoop. Move that here. Move that here. And move that here. Actually, we could be predictive. And the next line's probably there. Let's see. It's all good. I'm a realist at heart, but what Howard was getting at is just there's no point pouring salt in the wound. Red upsets people enough, but I'm not going to be hesitant in talking, reality. If they want that, that's not what I'm here for. But there's no point bringing it up over and over again. Yeah, so it's not a good W because we didn't quite go down to 51. I'm going to clear this in a minute. Once we get a little bit more height, I'm going to wipe the screen. I don't want to stop a good times that are already going. I'll wipe it when we get to 5410. Then we've completed the larger U shape. Yeah, why I do agree with that sentiment. To each their own. But yeah, no point. I get the idea, you know. And the statements on both sides are correct. But, you know, we try not to piss each other off. So one way I can avoid pissing people off is, of course, not confronting them with reality. But, yeah, I mean, ultimately the stock market proves you right or wrong. So, you know, I took out a $20,000 bet expecting it to go down, and I was off by a couple of days, but it still didn't move, you know, the amount I expected. So I paid the price, $20,000. So, but good learning experience. Yeah, I put my money right in the garbage can. Set it on fire. But that's all right. No point getting too adversarial here. Gotta keep that temperature down, or we'll all start murdering each other. Oh, can we get a breakout? A channel, and well, this line's fake, but you can see it already kind of works. But this piece here kind of touched it. If this is red, then this line's real. If it's not, then we're just reacting to the white line I just moved. Most of the time I draw lines, and they're not 100% accurate, but you'll see the market will tell you if it's right or wrong. So if this came up and hesitated, we know that this white line is real. But because it's so small, we might not see the hesitation. And if this just flies off the chart, it won't really matter anyways. But at least we know we should expect some red here, either because of this blue fake line or because it's the top of a pennant. It should have hesitated. So now we're seeing the hesitation, see? So with the knowledge that I was just describing as it was happening, you knew not to get in on this candle because the risk of it retracting like it just did is quite high. And so it did. And there's your red. And it's possibly the blue line works. But we'll find out if it stays on the blue line. But that's how technical analysis saves your bacon. And that's what this channel is all about. It's that sort of stuff. So now, if it gets below this line, which we had to adjust for this guy, because he broke new lows in a sense, then we have a wedge, a really small wedge here. And off we go. We could adjust it to this. That would, if it got over this, it would be like a pure breakout. But because this one got pulled back in, we're just going to leave it where it is and see where we go. So we got about 1 more minute if it's following the blue line. And this kind of plays also into the time cycle. So if you have this and then this, you can kind of guess just as an estimate that equal time cycle, you're going to have, you know, red again, right? But you see, just because we predicted this one red here doesn't mean shit all, because we're about to go into a breakout if this just goes up a little bit more. But it just helps you have a clearer picture of what's going on. But it doesn't mean anything because, ooh-wee, I predicted one red. I couldn't predict how severe it was, right? Just that there would be a red possibly somewhere here, right? So, but yeah, eventually some of that data might be useful, you know, especially if you're looking for a buy-in position. You could time it. So when it gets clear of this area, you're more likely to go up. Yeah, something like that. All right, so we are frozen. Looking at the seconds chart, we've gone flat for about 2 minutes. I gotta catch up on this chat. Try not to get too adversarial here. No, I didn't buy any more puts, John. And there we go. Well, that was a last minute breakout. We ran that clock right to the the peak. So there you go. And you see the blue line did pay out. Oh, and by payout, I meant play out, right? So I estimated with, the time measurement, right? And it actually did. You see, it pulled back. That was also part of the pennant. Here, also part of the pennant. Here, strangely enough, also part of the pennant. Yeah, nice. Now, let's try shifting it again. So now it showed weakness. So we know there's something here. And let's try to guess again. So if this is this wide, then right about there is where we're going to stop next, which, incidentally, is a white line. Oh, witchcraft. So witchy and so crafty. Let's see if that lines up. So we might do a little bit of red here, and then... So when you see weakness, it's usually an indicative of a support or resistance line. It's like a speed bump. And so you go over it and your speed gets reduced. If you get completely stopped, it's like hitting a brick wall. So it tells you something's there. And so in this case, we're going to just use the trend line of down and keep moving it. But there's probably a support or resistance line here. Support if we're going the other way. So if I look to the left, we got some tops here. Some bottoms. Yeah. Anything else? Whoops. Go a little further back. Oh, yeah, here we go. See? A big cluster of crap. When was this? This was the 16th. So that is definitely a support line here. So we're going through this now. So the next one's going to be actually a little lower. Let's put it right. Yeah, we already know about that one. Let's do that. Yeah. Okay, now let's go back to where we are. Crab people, taste like crab, talk like people. Oh, and there's the line we touched. Okay. So that's also how you go about it. So you adjust. So actually, I'm going to lift it up since that's where it touched. So the market will confirm your technical analysis, right? So you just guess, and then the market will tell you if you're right or wrong. But the objective is to try to guess correctly, and then the market tells you you're right. And then when you know what the market is doing, you can try to preempt it. So like here, we know it's draining on these lines, right? So we can kind of preempt it. We don't know how long it will go, right? But we know at some point we're going to try to gap up. Or we know just to stay out for the whole day because it's, a piss day. But at least our demon summoning worked pretty good. All right. Keep giving him the pitchfork. Let me just fix its wings, readjust it. All right. So now we should probably end up on this blue. If it's keeping with its time cycles. Or actually, let me adjust it to here, which means we will go to there. So there's hesitation, but that's that white line. And that's also the top here. So this should get pulled back. Yeah, there should be more red here. Oh, they're going to floor it. All right. So now let's see if it hesitates. Did. This gets pulled all the way back. Then that's the red we kind of needed for crossing this line. Jeez. All right. Are we going to hold this? We're going to grab to the blue. And it looks like we hesitated here. See if we grab the blue. Yeah, we touched it at least. And that's all we're going to do. Okay. That's still good enough. So this is 39 cents. Hey, my estimation skills ain't bad. So the line is actually here, which is where we stopped. Okay. And then if we keep with the same time cycle, the next one is here. Nice. We're climbing ladders. There you go, Freedom. You'll fit in. Yeah, it's all about the percentage. Exactly. Just like the Drew Carey show. It doesn't matter. I should have said the Drew Carey game show. It doesn't matter. It's all made up. The only thing I learned from the Drew Carey show is that Cleveland rocks. Ohio. That was a great show. Great show. No problem. Every day's not going to be great. But today's pretty good. A lot of days it's slow and kind of shitty because the volume's erratic. Right now the volume's low, but it's steady at around 20,000 ish. So, but the more erratic the volume gets, the harder and harder it is to do technicals because it's people just throwing grenades everywhere and fuck. But we have a slow death going on with green countering. So that's pretty predictable. I don't know when green's going to push, but until green shows major weakness, we should just keep moving as we are, right? Every time green needs a breather, we go this way. And every time green says, do it live, we go this way. So, yeah, pretty easy. Plus, I like seeing climbing money. It's good. Yep. Good old circle to hell. Hasn't failed us yet. Okay. Yeah. I want to clear the screen, but we need those lines. So we're now back in. This green line represents the pennant, the crappy pennant. So we're now back inside it. So that now means we can go back into breakout territory. Because arguably, we were in it when we closed last night and we gapped down, and this was a breakdown. And now we're going back in. So if, well, all right, I'm going to keep this. This line's important. Copy. Okay, if we wipe the screen and I go to, where's the time frame here? Why are you so laggy? There it is. So if I go, let's look at 45 minutes. Okay. So if we take this and we draw a pennant. So this is not a real pennant, but let's just draw it anyways. As this guy and there. So basically there's a pennant here, right? And maybe this time frame's not that good, but we basically broke down. And so we were in a free fall, right? And we stopped it. Now we're coming back in. So this had the potential of going south here, right? Because that could have easily gone to here or here. You know, there's easily. So that would have put us back into 40, but we stopped it quick enough. So now if we can get back up into the, what's that, 57, 56 area, then we have the potential to then break out the top. And the top is far more defined with these guys here than the bottom was. But you can see with the bottom, it touches it multiple times. So the bottom isn't too bad on this one. And you have a large green to start it all off. And the top, you got this and this, because I think this is lower. But you can see it's trying, gets close, doesn't do it, tries, rolls instead of just bouncing off. But rolling means it's less negative. So it tries, and then it kind of rolls. So the next time we might get our breakthrough. This was too early, too quick. This was not strong enough. But the third time, and because we're starting at a closer point, we might have the energy to do it. So yeah, that's if we get over 67.58 or 63.21. Somewhere around there, we should see a huge uptick. And then they'll claim it's the DCC, whatever, God knows what. But it's just going to be a technical breakout. We got to a point, everyone's seeing, you know, anyone can draw a friggin' straight line. and then they FOMO, and off we go. So that's looking positive if this just keeps on going. So far, so good. We're in a nice bull run with little red slowdown. Excellent. Let's paste this guy before I lose him. So actually, I might be able to use the time cycles here. Cyclic lines. So here. Hey, look at that. And then here. This and this. Does that line up? That lines up. Okay, let's get rid of this one. Okay. Let's see how that plays out. Actually, let's not do it on the reds. Let's do it on the greens. Every time green does a push. That might be easier. So that's the start of a push. This is the end of a push. End of a push. Start of a push, start of a push, middle point, start of a push, end of a push. So we have to go even smaller. Okay. Up, up, up. Nope. Yes. Yes. That might work. All right, let's try that out. I'm not very good with cyclic lines. But let's try something out. So you see that line, the same? This blue line's going to follow us for quite a while. Now we should be seeing, if this keeps up, we should be seeing our green. This will be our green run. Yes, it's on the top of the screen. It should be on the top of the screen. Let me check. Yeah, it's on the top of the screen. That's my position right now. I thought I got out overnight, but apparently I didn't. But I think now that I remember, there was a good chance of recovery. I could see it, so I just let it roll. Unfortunately, we dipped before the recovery, and I had to summon some demons, but at least it happened eventually. Yeah, it's all good. So, no green on this cyclic lines. Trend line's definitely holding, though. It does. It does. Yeah. I don't worry. The market does what the market does. It giveth and it taketh away. People like to personify things, but the market doesn't care. It doesn't even know you exist. Now, I wonder if we're going to get our green in the last. And if it's going to push hard to make up for the lack of green in this cycle. Nope. Is that a question? Tom? Oh, that's a statement. It took me a second. Yeah, looks like we're getting the green. It's going to floor it. If it does, it'll go over 54 something. So this might mean that our cycle are starting to drag out now. And we'll see with the green. If the green cycle is longer than 4 minutes, then we went from a 4-minute cycle to a 1, 2, 3, 4, 5, 6-minute cycle. We'll see. Ooh. So this is what I was expecting it to do 2 minutes ago, is this. We kind of lag there for some reason. And I say some reason because it doesn't matter, ultimately. What's done is done. History is written. And by the time you go and figure it out, it's old news, so who cares? The only time you really got to go fishing to figure out what happened and why is if there's a tremendous crash, especially on the indexes. You want to find out as fast as possible why, because you need to figure out if you're going to get, nuked. Yeah. But all of this is trivial. Pennies. Back to the good old days when we traded pennies a day. None of this whole dollar stuff. Back in my day, we traded pennies for whole weeks. I didn't see a dollar until mid-May. Yeah. Yeah, so I think that's an oversell. And so if this is the red line, let's say, let's put the red line here. We should have green bringing us back up. Grab back onto that blue line. Yeah, questions usually are, Tom, but sentences are usually finished with a period, but grammar and punctuation doesn't seem to, how to say it, be in your repertoire. All right. So if that's that, and this is this, then the next one is here-ish. So let's shift that up a little and shift this up a little. We're going a little tighter here. All right, trucking along. So in the more macro picture, we run a risk of a crown shape, which would take us to 53.85. So for those that are new, crown shapes look like this. And the defining feature is that this side becomes this side. And they usually match in size. So right now we're holding it off. But if this guy turns into a big red, then it will definitely be a crown shape. Also known as a head and shoulders. And if that happens, then we run the risk of going down to here, because this will offer a first level of stability, but then it can easily continue the crown shape. This will probably hold this level, but you'll get a drop. So that's the risk. But if we can turn this around or drag this out so that we don't match this, then we should be okay. So this is 1, 2, 3, 4. 1, 2, 3, 4. So there's 2 minutes of indecision, which could be green in this case, and then we get the drop. So we'll pay attention to that. Yeah. That is the problem with easy come. It's easy go. There is stability here, which allows us to continue up, but you can see it gets weaker and weaker as we go. So this becomes very weak, where this has a little bit more strength. And since this was such a slow drain, we should have some support from these guys, stopping us from going down. Yeah. Which is most likely why we have these. These probably line up with these. And that's why we got, the speed bumps we did. Which ironically lined up with the channels and, or magically, I shouldn't say ironically. It's all friggin' witchcraft. Yeah. Give me a line. So this should be green. It wasn't. Okay, so then if this is a medium red, it'll go to here. And we're going through the crown shape. Doesn't really have far to go. There. All right, let's see. Now, if it does stop here, we'll bounce off the bottom. So we'll touch it and then we'll bounce. And if it lands in this corner, then we're in a new time cycle. So that's good too. Volume's picking up. Might be a turnaround. Green might be leaning in. That might have been close enough to the bottom for a bounce. Generally, you have to touch the bottom. Did this touch? Hard to tell. What's the low? Low is 52.40. 52.80. 90. It was 10 cents off touching. So then it's possible this line is wrong. Let me remove it. Let's double check. I'm curious why it bounced. Okay, 80, 80, 90. Oh, 90. Here. Tops. But yeah, I would have expected 87. Interesting. Yeah, I mean, it's a difference of 10 cents, but generally it touches. But we'll readjust the line.
All right.
Yeah, so I just took a look at that since I'm sitting a little bit of a distance from the screen. So it looks like it actually the red bounced off the tops of the guys to the left, and then the next green bounced off of the midpoint of them. So that red did actually bounce off of a proper line. I just couldn't see the candlesticks from here. A cup and handle. Yeah, that's quite possible. Yeah, see, it went up and touched this guy. There's your U shape. And then this is your roll from the U shape, right? Yeah, that's pretty straightforward. And then retractions are healthy. So if you remember this bad boy, where the hell is he? This guy, cyclic lines. Nope. Nope. Why can't I find him? Not this one. Not this one. Not this one. Oh, it's in with the pitchforks. Okay. So if we take this guy and we do this, right? We're then, in a healthy retraction. As long as we're over 50%, things are good. So we're just doing a healthy retraction that will help build the base for the next run up. Yeah. We could probably get rid of this now. There we go. So we did complete the crown shape very slowly. So now we run the risk of completing the next crown shape, which would bring us down to this guy here, which is 70% or 25%. Oh no, sorry. That's 30% or 61%. Sorry. Got that. Colors are all messed up. There's the other side of this. So if we bring this over here and shrink it down. So if we know the bottom, because you can't use this without knowing the bottom, but if we base the bottom off of the Gantt box, you can see that the lines on the way up, say they seem to hit, right? Yeah. But so when we're coming down, we'll have similar lines as well. Yeah. Yeah, the Fibonacci is a weird thing, but it works. The shit works. You can read up about it, and it's witchcraft if you wish. So now we're in the lower channel. Now that's most likely it's going to continue down and complete the crown shape. If we get a bounce, we need that bounce to get us to 54, 54.24, I guess. And then we're in the clear. And then that would complete the roll off of the cup and handle. And then we'd go into the next pattern, which could be a W, a small U, a check mark, whatever. But we need that little bit of kick to finish this pattern. Yeah, the ascending scallop. The technical pattern of the dancing lobster. We should just make up random absurd names. The French mustache with a twist. What's his name? The Hercule Poirot. That's it right there. That's what W's can be called. It comes in, it does this, and it ends like that. That's the Hercule Poirot. Or the Saggy Wench from medieval times. Whichever works. Depends if we got a sponsorship with Denny's or not. The Saggy Barmaid. No. All right, well, let this baby roll. We'll see it. Get the seconds chart back up for you. The overall market is not bad. Let's see how Elf's doing while we wait. So Elf has leveled out. So I'm guessing it went up and then it stopped. Yeah, went up, stopped. Because the hell if it went sideways. Jeez. They floored it, floored it, floored it. So it's showing weakness now, but they're still going to go for another breakout. You might be able to scalp that. If it goes over $14, you're probably going to get another breakout. If you wanted to try to play this. Yeah. You might even see the breakout start at 13.44. Nuts. What about Clove? Yeah, still dying. Wish. It's thinking about it. Oh man, the stock market is such a casino. It's a lovely casino. Stock market's for investing. Piff. You haven't met the internet. We ruin everything we touch. So now we're testing the 0.5. So if we can get over this. So let's guess the next time cycle is here. So I'm letting the green establish the time cycles. Or actually, it's really the reds, but the green lets then the reds. And so far, it's been pretty good. We guessed this one. We guessed this one. Now we're going to guess the next one. Let's see. I want to see some leveling out, though. We're still, unfortunately, trending negatively. It's a little bit leveled out. And that white line should save us a little. And that might give us the base to level out. We'll touch the white line again, bounce off of it, and then that might do it. Because if this goes to here, the resulting shape, right, is this. And if this is the next down, that gives us the level base. Then if we do this, now we're really leveling out, right? Like what we don't want is that. That would murder us. So, yeah, we might have it. And then each of these upswings have the potential of, running. Yeah, as long as we don't, we're not seeing any intense red, so, maybe. I would say I'm bullish on this. Doesn't look too grim. Red's not flooring it. So far, red's been very predictable. It's just a matter of green needing to lay on it. Floor it. But like normally like this, that's weakness. Red should just come out and slap it into oblivion, right? But here we are. Red's not doing anything. So that's a good sign. Yeah, see, red's response wasn't earth-shattering 10-cent drop, right? Like earlier today. That's what you would have saw yesterday. It's what you saw. So that all speaks to upwards motion. At least as long as that lasts. Because now green doesn't have to spend all of its energy just holding back red. It can start using that energy to go up. Yeah, we're now trading at 5,000 volume every 5 seconds. Volume is taking a dirt nap, which you can see by we're driving into the countryside on our little histogram on the bottom. We're leaving the city and going right into the country. Looking for a Lambo dealer. Always searching for our Lambo dealer. Mm-hmm. The intensity is starting to pick up on these guys. Breaking out. Maybe my thing just glitched. It looked like these were updating quicker. I don't know. Maybe something is going on. So far, so good. Red. Okay. So GME is going to go sub 210. It's already done that earlier today, right? Yeah. So it's not a big deal anymore. 209 is the number to watch. Okay. So this did not play out. If this is green, then we should see red 1, 2, 3 minutes from now. But it looks like we just took a bit of a push down there. Did not match our lines. See if we recover. No, something's changed. So this is our early warning that something's different now. If green doesn't erase this red completely, that could be an oversell. That could just be one person saying, I'm out. And so it disrupts the trend. Green's not countering at all. Okay, green's mounting a little bit of a defense, at least on the seconds chart. Now it's showing up on the main chart. So I think there was, might be able to see it in the Dow. No, I think there was something that dragged us down. I don't know. I don't see it. There's no clear evidence unless there's something going on right now, but I would expect something like this if we're going to base. GME is just not even moving. Oh, what a shitty stock. We're holding on the support line. That's good. It's something definitely picked up. And just based on the technicals, right, we're moving at kind of a set increment. So this was a little early and it was aggressive, right? It's not too aggressive and it's not breaking the line, but, this should have been delayed by 2 to 3 minutes or so. So now that this looks like it's over, we might get our bounce up from the crown shape. So I was hoping this was our bounce, but we kind of got slammed. So now we're going to try. And hopefully this, if it breaks over this, it should be good to go. So let it get over the 75% line. So now we can actually turn this chart upside down and we can use it as a growth chart. Scroll. I can't even see what I'm clicking. The colors. Where is it? Right here. Flip it. There we go. Okay. That's this corner and that's this corner. Okay. Ah, fuck it. I can do it here. I can at least see the circle when it's contrasted against the, there we go. So now we're using it as a growth chart. So we gained 25% back. And we're going to head up to probably 50. Then we'll have to, we'll show weakness and then potentially break out. We can technically show weakness on each of these lines on the way up. So here's us going back to the 75 line. And let me adjust this so it's more accurate. There we go. Yeah, so we're right on the 75 line. All right. All right, we'll let this baby roll. Wow, that's quite the headline, Dr. Overkill. Let's see if the market reacted to that. So that's playing out slightly up inflection, but it's playing out just as I drew it. This one's playing out even flatter. It doesn't seem the market gives a shit about that news. What about the UK, since they're getting their ass handed to them? Although the US is never far behind. Yeah, they closed on a high note. Yeah, they don't give no shits. Yep. No one seems to care. So we're not going to have to worry until these go blood red. We don't have to worry about the carpet being pulled from underneath us. As long as they stay green, we should be okay. They're testing. They're not caring. They're not caring. The Dow is kind of eh. No critical radical change, so when was that news released? Just right now? Because I could say if they released that news at 11:30 or 11:15, that would make sense. Like, that's kind of what I would expect. You know, like, oh, you know, we're fighting COVID. COVID's great. Oh, by the way, the Delta variant. Oh. And that's what I was talking about yesterday, right? Whenever they have these press conferences, you got to watch. So, yeah, that's the American way, Tom. It's like, didn't kill me. Now I'm tough. Let alone God knows how many people prior to you got infected and after you. But you got it. Now, don't care. America. Oh, geez. Well, Fauci is not wrong about the Delta variant being the greatest threat because obviously its transmissibility is through the roof. But, you know,
what's the guy gonna say? He's just gonna get up there and be like, "Oh yeah, man, the fact that everybody's afraid of vaccines, we're doing great. Keep it up. Oh, by the way, polio's back, and same with measles. So once COVID's over, can you guys, the diseases we wiped out around the world, can you just go back?" What did he get caught on lying? What did he lie about? Because that's news to me. Well, definitely COVID's not a cold. It's closer to a flu, but its lethality rate is pretty high. It just doesn't look high now because, the people that it killed are dead now. He lied about funding of the lab, or he lied to get funding for the lab. Oh, interesting. And which lab is that? He funded the Wuhan lab? Lol. How did he not know he funded it? Is it just through one of his subsist? No, the mask thing's a little bit different. That has a lot more to do with stupid people than it does about government policy. The flip-flopping on masks is just because they're trying to write policy for the lowest common denominator. So that has way more to do with the IQ of people being stones. Because really, if you just wash your hands and not cough on each other, there'd be no transmission. But of course, they can't do that. So you have to start writing all these stupid, superficial rules to try to convince people to just do what needs to be done, which is stop fucking up. And look at how that went. Jesus. Shell company. Okay. So he might have not known, right? And then somebody dug it up and nailed him. But did he know about it and like hid the fact? Because if so, that sucks. But oh well, that sucks. Yeah, he's in trouble now. Yeah, okay. All right. No, if they got him on the emails, then he's pretty fucked. Yeah. True. But also too, anybody that's in the political spectrum, right, has to also sometimes word stuff for the greater good, because you're like, oh, the virus is deadly, but it's not that deadly. And then you're like, well, he said it's not that deadly. And it's like, well, it's still got a 3 times kill count. But realistically, if you don't give a shit about anybody else, it's not a big deal. But for a government, it's a big deal. Losing, 3 to 8% of your population. It's not great. I think the total kill count now is 1% of the population.
or zero point 0.1, but they also managed it. In the beginning, there was a little bit of overflow, but now at least it's settling down, right? But yeah, it could have been a hell of a lot worse. Because yeah, I think the fatality rate is almost 50-50 if there's no medical intervention and you get the bad case of it. On average, it's like 20% if you all things considered. So if your body fights it off or doesn't fight it off with no medical intervention. With medical intervention, I think it gets down to 5% of elderly people and like 1% to everybody else or less. So it looks good on paper, but it's because you have a functioning medical system, right? But they can't explain that in a press conference because the average person just goes, I can't understand how to feed myself, let alone these big words like mask and virus. This confuses me. And so you have to dumb it down. And then, of course, you dumb it down too much. And then it just gets so friggin' stupid. But yeah. Anyways, yeah, I'm definitely not pro how the government handled COVID. You know, they should have just treated people like adults and let the fucking lottery play out. Oh, you went to a giant party and infected 100 people. Cool. Well, you can stay at home while we treat these 100 people. Oh, you're dying? Oh, the beds are full. I'm sorry. You know, cut the people off. If they're going to be idiots, sink them. You know, you smoke 700 packs a day and then you get lung cancer. You're cut off. You know, you made your choices. Oh, well. But yeah, it's the U.S. term nanny state, or in Canada, it's the socialist state. You know, you have to help people, but at some point, just take the warning labels off of bleach and let it sort itself out. Yeah. Yeah. Well, even the Greeks knew this. They're like, you know, if we, American style government where you have people elected by the people, they're like, okay, in a republic, that's cool. But what happens when your people are idiots? Idiots elect idiots because they can understand idiots. And then those idiots put in policies for idiots that make more idiots have an easier time for idiots to get in. And so you're racing to the bottom, right? And the ancient Greeks knew this. They're like, okay, at some point, the intellectual elite need to kind of go, not that guy. You know, at least have a bare bones bottom. Because the Greeks, had this idea and ran it through its paces. And they're like, well, what happens when you elect a total retard? Well, your whole government becomes a total retard. So at least America has strong institutions that, withhold the change in government, which is why America still stands. They try to burn it down, but it just keeps on trucking. But without those institutions, right, the states would flounder like an African country. You know, the government changes and all of a sudden it all destabilizes because there's nothing to hold it up. So anyways, a little off topic, but definitely on topic with Fauci and political figures. You know, often they have to support the system over the people just because the people can't friggin' comprehend what the hell's going on. And, and you can't really tell somebody it's for your own good. And they're like, I'll be the choice of that, as they chow down on 10 hamburgers and didn't pass high school and then wonder why the world is confusing and they have heart issues. And then you're like, all right, great. That's our decision maker. That's our voting base. Give me 1 second. I just got an email here. As you can tell, I can't do two things at once. Stocks are leveling out. That's good. What time is it? 1:12. Yeah, we might. So that's our 1 o'clock push. 1,300 hours. So normally people try to preempt it, but we can see today
that might have been the preempt, but we definitely got the, as we're calling it, the stoner push. They wake up 1 in the afternoon and look at their phone and go, oh, I better buy some stocks. I don't know who it is, but 1 o'clock seems to be a buy time. But sometimes they preempt it. So that might be preempting here because we were kind of in an aggressive downwards. Yeah, right, at least right here. So the aggression kind of ended here. Yeah, interesting. Ooh, that's a nice push. Nice. So we leveled out. Yeah, nice. Wasn't expecting that. At least not that extreme. Yeah, look at the seconds chart. Holy crap. What the hell just happened? Look at the volume. Something's happened. What? Yeah, something's happening. See? Well, not so much the Dow. S&P, the NASDAQ, GME. No. Them. Denny's. Denny's is not even traded. Look at all the flats. I don't even know where it is. Oh, it's here. No. Let's see. The big stocks should all be reacting. No, 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 no. Us. No. Okay, maybe it's not something. That's a lot of volume, though. Interesting. All right, well, we'll keep an eye on that. So we just completed our retraction pattern. So we did a U, we rolled, and we just like nuked it. That seems to me that something happened. You don't just go vertical like that. Look at how big it is compared to everything. It's huge. It's like this size. So that's something. And even the volume, if I scroll out, look at the volume difference on the seconds chart. It just went like romp, just took off, right? On nothing. Unless it was a time to buy, because it all started at 10 or 111. Interesting. Interesting. Ooh, Krispy Kreme IPO. America #1. Anyways, I gotta send this email. Yep, that'll be fine. If we Okay. Yeah, that's the so I work with Georgian College, which is a college that's 400 kilometers away from where I am in Ottawa. And so I have a group of students. And so the new intake of students is July 5th. So they're just asking me about what projects I'm going to run this year. So I'm just going to continue my projects. Yeah, this definitely looks way too much excitement for just random. Something's going on. Have fun, Tom. Yeah. Yeah, the Dow is still. Nope. Dow just took an arrow. Ooh. Okay. So hype and not hype. Well, let's see if that hits us. Kind of want to get into that Krispy Kreme IPO. Wonder how they're doing company-wise. Are they still growing? They were a big deal for a bit in Canada, and then people just stopped caring. Yeah, I don't know what's going on, but something kicked this off. The volume is through the roof, and we're flooring it. Yeah, because see, normally you'd see an indication on the market. But why are we the only one I can see going up? Shorts, if shorts getting covered, why would they do it now? Shit. Krispy Kreme is working 1.1 billion. They must be expanding overseas. Fuck, for a donut company? That ruling doesn't come into effect till tomorrow. I don't think this is if someone's going to cover their positions, they will do it, at the lower price, or they'll do it earlier, or they would have done it a week ago or a month ago or whatever, right? They're not going to do it in the last second. Now, if there was a margin call, they tend to come around 1 o'clock, 2 o'clock. But or some companies or brokerages will close them out at 1 or 2. Others will close them off in the after hours or on market open. But you wouldn't see that on market open. It would get lost in the sea of garbage. Now, must have been something, news or change in events, basically. Because we just floored it on the volume there. We're starting to lose steam, so it can't be that important. But yeah, that's quite the volume spike, because if we zoom out, like that volume is as high as basically the opening volume. But we were asleep. You see how low we were? We just kind of went boom. Now, volume spikes are not uncommon, right? In our beautiful cityscape here. But that definitely was, and it's continuing too. The volume is ramping up. You can see the faint yellow line, the hills in the background of our city. It's ramping up hard. Interesting. Yeah, possibly. Wonder if I was expecting negative news. Maybe it's positive news. I wish I could read sign language,
Then I wouldn't have to have sound. Oh, yes. Anything that goes in the US has to have closed captioning. I forgot about. Okay. Well, I might as well get this set up for later because we're going to watch another press conference.
And here's why we're able to do so. Since the president took office, COVID-19 cases and deaths are down by over 90%. Nearly every state is open for most activities, and the economy is rebounding strongly. Importantly, today, I'm announcing exciting news. We have already met the president's 70% goal for all U.S. adults 30
There you
years
go.
old. That's right. For those ages 30 and above, 70% have at least one shot. We got here because the president treated this as a wartime effort, built a whole-of-government response to defeat the pandemic, and mobilized state and local governments, the private and nonprofit sectors, and asked every American to join this fight. In the past 150 days, we went from not having enough supply to securing enough supply to vaccinate all Americans and making every adult eligible for vaccinations months ahead of expectations. We went from not having enough places to get vaccinated to more than 81,000
Your numbers are not adding up, Howard.
vaccination sites. In fact, today, 90% of Americans live within 5 miles of a vaccine site. Tens of thousands of sites offer walk-in vaccinations, and thousands are open 24 hours a day on Fridays in June. And Americans have new tools to find the most convenient vaccination sites and free transportation to get to and from sites. We have built an unparalleled, first-of-its-kind, nationwide vaccination program. And as a result,
Listed for 12, sold for 1.2, or is it 10.2?
100 million shots in just 150 days. To put that in perspective, at the pace the U.S. was vaccinating before the president took office,
Because that's an $11 million loss.
36 days.
That seems a little high.
Almost a year to get 300 million shots in arms. Instead of hitting the major milestone of 300 million shots in June, we would have hit it in December, 6 months from now. And America would have looked a lot different than it does today. We would have lost more lives, more people would have gotten sick, and many of our businesses, restaurants, and schools would still be closed. The president understood that we did not have a day to waste, and we have moved at an unprecedented speed. Importantly, Americans have responded to the president's call. More than 175 million Americans have rolled up their sleeves and gotten at least one shot. And over 150 million Americans are now fully vaccinated. As a result, we are close to achieving two
So a
aspirational
third
goals we set.
of the United States is 100% vaccinated.
The first goal was related to the percentage of adults
Not
who had
bad.
at least one shot by July 4th. We asked Americans, state and local governments, and the private sector to help get to 70% of all adults with at least one shot by July 4th. 16 states and the District of Columbia have already met this goal. And let's remember, when the president took office, we were at approximately 5% of adults with one shot. So in just 5 months, we've been racing.
Oh, God. There's one in every crowd, Trent.
So how are we doing? Today, I want to drill down on the numbers that show where we have made the most progress and where we have more work to do. We set 70% of adults as our aspirational target, and we have met or exceeded it for most of the adult population. This is a remarkable achievement. When we began our vaccination campaign, we prioritized the most vulnerable. And it's clear from the numbers that this strategy has worked. Looking at Americans 65 and older, our most at-risk group, we have more than 87% with at least one shot. Again, 87% of seniors who tragically accounted for about 80% of COVID deaths.
There we go.
At least one shot.
Those numbers work a little bit better.
80% of people 65 and older.
Yeah, you wrote 1.2.
Vaccinated. That's life-saving progress. For Americans who are 40 years old and over, 75% have received at least one shot.
In both eyes.
Americans 30 and older, we have met the president's goal of at least one shot. That's
okay,
right,
so
we
we're
have met
leveling
the
out.
president's 70% goal for all U.S. adults 30 and over.
Oh, good stuff, Trent. I'll see you on the polio bandwagon.
Once the data for the July 4th holiday weekend is fully available.
Oh, boy.
So as to our goal of 70% for all adults, we're going to hit it for adults 27 and older. This is amazing progress and has our country returning to normal much sooner than anyone could have predicted. Where the country has more work to do is particularly with 18 to 26-year-olds. The reality is many younger Americans have felt like COVID-19 is not something that impacts them, and they've been less eager to get
You might have still died anyways.
However, with the Delta variant now spreading across the country and infecting younger people worldwide,
but that's a whole different boat.
than ever that they get vaccinated. We are working with state and local leaders to reach them. We think it'll take a few extra weeks to get to 70% of all adults with at least one shot, with the 18 to 26-year-olds factored in. So to recap, with respect to the first goal of getting at least one shot to 70% of American adults, already we're at almost 90% for 65 and older, over 75% for 40 and older.
I rolled the dice.
We will meet the 70% goal for ages 27 and older by the end of July 4th weekend, with a few extra weeks needed for the 18 to 26-year-olds to get vaccinated. Now, everyone involved in this effort knows, and the president has said repeatedly, our work does not stop on July 4th or at 70%. But we use this aspirational goal to drive progress in a very short period of time. It has taken a huge collective effort, and we have made significant progress. The second aspirational goal we set was to have 160 million Americans fully vaccinated by July 4th. For context, only 3 million Americans were fully vaccinated when the president came into office. In just 5 months,
That's pretty good. 87% of all seniors?
over
Or is that 80% of the 175 million? Oh, I guess it is.
more than 56% of the
Oh, but I wonder if that represents the total
This is
population.
important progress across the country.
Represents 56% of the adult population.
160 million Americans fully vaccinated no later than mid-July. Throughout the last 5 months, the president has set goals to rally the American people behind defeating this virus.
Need about 70 to get to herd
Most ambitious
immunity.
celebrate our independence from the virus on July
Then the
4th,
virus will basically
for America
wipe
to
itself
look
out,
like America again.
or no longer be able to spread.
Whole of government effort, and the American people stepping up to do their part.
America look like America again. Have you seen Detroit? Man, let's not set our goals high here.
A summer of freedom. This is cause for celebration, and that's exactly what Americans will be able to do on July 4th. Celebrate independence from the virus. But we're not done.
How big is AMC?
For all the progress
I don't know what you mean.
vaccination, individuals who are still unvaccinated are still at risk. We are not leaving anyone behind in our response. And we will continue to put equity at the center of everything we do and focus on helping at-risk and hard-hit communities drive up vaccination rates. We want every American in every community to be protected.
Arguably, Trump did very little.
but he did get the ball rolling. But if you do look at what he did, it was more hindrance than help. But at least now, the balls are rolling. But yeah, Trump didn't do nothing. But could have done more for sure. Well, we know now if Trent starts to turn, gets a taste for brains, we're going to have to put him down. It's not personal. Oh, you like spaghetti? It tastes like brains? Oh dear. Over the summer months as we help lead the fight to end the pandemic across the globe. Now to say more about why the progress we are making here at home matters, let me turn it over to Dr. Fauci. Dr. Fauci.
Thank you very much, Jeff. I'm going to just spend a few minutes now recapitulating what Jeff
The
said about
lowercase the doctor, but capitalized the name.
and what the obstacles are. And I have the first sign. As Jeff has said, our aspirational goal for July 4th was 70% of the adult population receiving at least one dose.
The end game.
But that is not
Crush the outbreak. Everything's a war.
Go well beyond that, beyond July 4th, into the summer and beyond, with the ultimate goal of crushing the outbreak.
And the main obstacle is hunting down young people to get vaccinations. Go figure. It's always the main obstacle.
Particularly among the young, and as Jeff said, particularly among individuals 18 to 26, although any age of an unvaccinated person is someone we need to get vaccinated as we concentrate on the younger. Next slide. If you take a look, for example, can I have the next slide, please? There are 16 states plus the District of Columbia have vaccinated greater than 70%.
Not bad. 70% in 16 states. And then there's the 4 states to not be named that are under 50%. Let me guess. Louisiana, Florida, Alabama. Who would make the 4th?
The Delta variant. What do we know about that variant? The transmissibility is unquestionably greater than the wild-type SARS-CoV-2 as well as the Alpha variant. It is associated with an increased disease severity as reflected by hospitalization risk compared to
Tennessee. Yeah, just spitballing here. But when there's 4 to 5 holdouts, I think we know who they are. Who broke the window in the classroom? Well, let's all look at Florida, man. He knows what's up. Holy crap, look at it go. Wow. Alpha leveled out, and Delta just nuclear. Wow, that spreads fast. Jesus.
The Alpha. Look at how the Delta in red completely began to dominate the
Woof.
throughout the UK to the point where it's well over 95% now. Next slide. Among whom is this taking place? The Imperial College of London did a study in over 100,000 homes and looked and found that
50% increase in positivity.
With a 5-fold higher
Damn.
positivity among children 5 to 12 and young adults 18 to 24 versus people older than 65 years old.
Yeah, they got nuked. Well, just looking at that chart.
What's happening in the United States? We've seen
she's ramping up in the US though. Look at that. Went from 1.2% and now it's cranked up to 20% 4 it's a month later. Oh man.
And as of a couple of days ago, 20.6% of the isolates are Delta. Next slide. Here is now some of the good news.
Oh, okay. Here we go. So here's the real numbers. 88% effective against the symptomatic, the Delta, and 93 against the Alpha. That's good enough. A 10% drop for a 5 times more effective virus. Zeneca is only 60% effective. Oh, shit. Only against hospitalization, yeah. It's 92% effective of not putting you in the hospital, but it ain't going to save you. It was only 60% effective at stopping it. Well, at least it reduces the severity. So, because that's really, when it comes to viruses, that's the issue. The virus itself is not really the problem. It's how fast it can replicate. If it can't replicate quickly, your body has enough time to fight it. If it's very fast, it ends up killing you within like 24 hours or 3 days like Ebola. But generally, if it's so deadly, it doesn't spread because you die before you can transmit it, which is why things like the flu and the common cold keep persisting. They mutate, so your body can't fight them. And 2, your body fights them as a winning war, but very slowly, because the bacteria and the virus are just replicating like no one's business, right? Well, actually, the common cold's a virus too, but that in the case of a bacterial infection, right? Your body basically has to outpace the spread of the bacteria to win. If it can't do it, you die. If it does do it, then you live with some damage. If it does it really quickly, you don't even know you're sick, right? So that's kind of where we are with viruses as well. So at 5 times more replicatable, if you will, is not good. Death rate's down, that's good. 12% on the 7-day moving average. Not too bad. But you're also got vaccines out the wazoo now. So, but I wonder how those, 4 states, wonder what their death counts look like, because they're probably weighing down the average.
Entirely preventable. This new virus forced too many of our families to accept death as its outcome for too many of our loved ones. But now this should not be the case.
Accept death as an outcome? Yeah, no. Oh, now she's speaking facts. Can't do that. Americans don't respond to that.
As long as there are those who are not vaccinated, COVID-19 will remain a threat. CDC continues to follow the prevalence of the
Libizabon?
COVID-19, as you have just heard. In the last 2 weeks, the prevalence of cases resulting from the Delta variant has doubled to just over 20%, as Dr. Fauci just showed.
I don't know what that is, Limboni.
This represents nearly half of all infections in HHS regions 7 and 8. This is concerning but expected, knowing what we do about how efficiently this variant spreads, and by what we saw in the United Kingdom with this variant. We know our vaccines work against this variant. However, this variant represents a set of mutations that could lead to future mutations that evade our vaccine. And that's why it's more important than ever to get vaccinated now.
Yeah, and that's a very valid point. If they don't squash this virus soon, then if it keeps replicating, eventually one of these is going to beat the vaccine, and then they're going to be in a whole lot of trouble. Yeah, but that's always the risk, right? If you don't nip it in the ass, then the millions of generations of viruses with each infected person, one of those dices are going to roll, and you're going to get an ass-kicking virus, which is likely how COVID started. People were getting sick all the time from it, and eventually one of them said, YOLO, and there we go. Either that or, a lab. Who knows?
Symptoms may vary and may include fatigue, brain fog, headache, loss of smell or taste, dizziness.
And now they're just putting out the point saying, even if you survive COVID, you'll get heart palpitations and a whole bunch of shit, depression, anxiety, insomnia. Well, maybe I got COVID.
Weeks after infection. For some people, this is severely debilitating. A recent study published in MMWR found that 2 out of 3 adults who had COVID-19 and were not hospitalized for their initial illness went on to have at least one outpatient visit for symptoms such as chest or throat pain, shortness of breath, fatigue, and cough, 1 to 6 months after they were initially diagnosed with COVID-19. The study also found that more than 1 in 3 patients had to be referred to a specialist, such as doctors that specialize in pulmonology, neurology, cardiology.
And we're still going up. Nice.
In other words, even patients who were not hospitalized
Damn, cardiology.
infection were commonly referred for additional evaluation for COVID-19 related symptoms and conditions after their initial illness. We have seen post-COVID conditions in people of all ages.
Yeah, it's so like the damage to the lungs ain't that bad, but the damage to the heart, that's the one that you don't want. Lung damage is crippling, but inflammation of the heart is potentially lethal.
I invite you to visit the CDC website to review new information.
Yeah, you definitely don't want the long-term conditions of getting COVID. Or getting the bad COVID, let's say.
To identify how common these longer-term effects are, who is most likely to get them, and whether symptoms eventually.
The roll is strong. Yeah, we're doing pretty good.
Are also underway that will help us better understand post-COVID conditions and understand how to treat patients with these longer-term effects. Thank you. I'll now turn things over to Dr. Murthy.
Well, thank you so much, Dr. Walensky. As Jeff laid out for us, we've made remarkable progress in the last 6 months to get people vaccinated. And our work isn't done yet, especially among
That's an interesting history there.
29-year-olds. Today, I
in
want to
baloney.
talk about what we've been doing to increase our efforts to connect with them and to ensure that they know that they can and should get vaccinated. First, we focused on connecting directly.
I am legend. Wow, this guy's mouth is like getting washed out from the screen. I can't see his lips. It's so weird. I just see moving teeth.
Over 700 colleges and universities have already signed the pledge. And last week, we launched this student community core, where students participate in bi-weekly calls to learn.
Damn, look at that push.
And hear from their peers.
Volume's not there, but I'll take it.
Members and other community members about getting vaccinated. Second,
Yeah, it looks like the market's happy with this.
Who are offering incentives for young people. This includes major sports leagues, which are offering
whatever that was. It just punched through it.
Which has launched a sweepstakes giveaway for tickets to independent music venues, and includes stores that are now offering free items when a customer shows their vaccination cards.
Looking good.
Today, Walgreens is giving every person who comes in.
The video's a deep fake. Yeah, it looks like it. His mouth is so weird. My screen, I guess because of the color, I can barely see his lips. I can just see the white of his teeth moving. And his cheeks have no definition, so it's just eyeballs, nose, and moving white teeth. It's crazy. The contrast, I guess, is too high. Because his shirt is white and his jacket is like pitch black.
Plus, celebrity PSAs on more than 850 radio stations. We've organized Instagram Lives with influencers and a YouTube town hall where influencers and creators are in conversation with public figures and doctors, including those of us on this press conference and President Biden.
Oh, they're gonna go with influencers. Hey guys, get vaccinated, because if you want to go to AMC, dogs, get your shot. Please give me money, U.S. government. On video game platforms. We're asking all young people to have conversations with friends and family. I just did. Where's my money, dog? Hey, maybe they'll give me a sponsorship. Get the shot. Don't miss your shot with AMC.
Have been led by young people, whether it's the civil rights movement or our original fight for independence in America. And this generation of young adults has shown time and time again their incredible energy and power to drive change. Today, they have the power to get.
Oh no, I'm not a salesman. I'm a comedian at best.
To help
That's
nation.
at best.
I believe they will
Although I
rise to the
should
challenge,
write
and we
this
will
down.
be there to work with them and to support them at every step of the way. Thank you all, and I'll turn it back over to Jeff.
Wonderful. Thank you, doctors. And now let's open it up for a few questions.
Thanks, Jeff. We only have time for a few questions today, but first we're going to go to Sharon Lafreniere at New York Times.
All right. Oh, the dangerous question time.
Sorry, I have to unmute. So I would like to ask, what will happen this winter if there continues to be a solid...
Fake commercials are always fun. Like, whose line is it anyways? You know, all the fake everything they do, all hilarious.
Daily deaths, or are those days behind us?
Dr. Fauci?
There's the persistence of a recalcitrant group that doesn't get vaccinated. There will be local type of regional spikes.
Yeah, this is likely FOMO, probably driven by the good news.
Namely, the three major surges that we've experienced over the
But the markets aren't showing a crazy radical run up, but they are showing positivity. Neutral, but going up.
But there is a danger, a real danger.
So we leveled out, but man, whatever kicked us off. Like, we were kind of rolling here, and it was just like someone floored it. Look at the difference in volume. So now it's probably just FOMO carrying us. Or once we find out what this news was, then that may have, you know, as everyone else is figuring out the news, if we see this get more energetic, then it's a big deal. The fact that it showed weakness right away seems that it's not a huge deal, but then it went for round 2, but with less volume. So I don't know what it is yet. It's not a super big deal. But maybe fears about the Delta variant, you know, now the fears are abated. Maybe there was an institutional buy-in because they heard what they needed to hear. I don't know.
Next question.
Do not know. Doesn't look like it's one person, though, because if I looked at the volume, it was ramping up. But that could have been a buy, just so it doesn't, you know, tank the market. Or not tank the market, overdo it, right?
I noticed there's been a lot of focus on the milestones that they've hit so far. Should we expect any new goals on vaccinations going forward from the administration?
So, Caitlin,
I read about the FTD 35, but I don't think that's the case.
30 and over, we're at 70%. By July 4th,
Yeah.
we'll be
I thought it was yesterday as well. But then they moved the goalpost, right? They're like, well, it could be anywhere between these couple days, right?
And then we're going to continue to drive.
But then why 1 o'clock, right?
More and more people. I'll leave it
It's like,
to set an additional goal. He's our goal.
I mean, the conditions were good for a push, but someone clearly pushed. Like, we quadrupled or even 5 times our volume, or 10 times our volume from just 10 minutes before that. So something changed. It doesn't really matter what. It's just interesting. So we're just going to let this baby run. It's not showing any kind of slowdown. This was not so great, but then it ramped up and went ham. Here, it's leveling out. But if it keeps pushing, then we're just going to go, you know, potentially a lot further up. Okay, so here's a little bit of weakness, and see how green reacts.
We can not only do that, but if you're vaccinated, you can be part of large gatherings. You can participate in so much more of life that we have missed out on over the last year. So I think it's just important to keep in mind that the most important metric at the end of the day is what are we able to do in our lives? How much of normal have we been able to recapture? And I think what we're seeing now is that we have exceeded our expectations, that we've just got to keep going because
yeah, I like the idea of the FTD 35 theory, but yeah, it doesn't quite line up. As soon as you can start moving the goalpost around, then it's no longer, you know, got anything. Because at that point, there's tons of factors that can drive up the price, right?
Nancy Cordes at CBS.
And they're looking at it from a daily point of view, right? We're looking at it from a minute-by-minute point of view.
So why 1 o'clock? Why 1:15 in the afternoon? Like, how does that fit into the 35 theory? Wouldn't it have been in the morning? Wouldn't it have been when it was at its lowest? Wouldn't it have been the day before to beat the rush? Like, they're banking on the idea that people wait to the last friggin' minute and get effed right at the very end to cover their calls. And it's like, man, if you're in a train wreck and you see the brick wall coming, you just sit there for the whole train ride? No, a lot of people are going to be jumping, right? We see it with the stock, right? People jump all the time because they're like, oh God, it's going down. Or it's going up, it's too high, let's jump off, right? To think that a smarter corporation will just ride it to the very end, it's a little absurd. Some will, of course, but all of them, it's a little stretch, right? So, I don't know. I like the idea. There's probably something there. It's just not playing out the way they describe it. And that's the part I have a little bit of wishy-washy about. But yeah, time cycles are a very real thing. You know, the witching days are technically a thing. But their effect is not guaranteed, right? Because you don't know who's playing, who's going to come out. You know, you have a little bit of an idea because you know the amount of calls and puts and all that sort of stuff, but you don't know how many of them are not covered. And you also don't know how many people are going to be share buyers or share sellers, right? So there's a whole bunch of variables that just saying, oh, this day because it's this day doesn't really factor in. So anyways, that's my 2 cents on the whole bucket.
Yep. Zeke, AP.
But it's interesting to read nonetheless. It gets you thinking in the right direction, at least.
That haven't even reached 50%
Yeah.
of their adult population yet vaccinated. Is the White House looking at a different approach to those states? Is there,
I can't predict that far into the future, Paul. I can only predict like 2 candles into the future at best. Maybe sometimes 5 or 10 candles. So you would know by tomorrow morning what we're going to do. You know, it could run up in the after hours. It could crash in the after hours because this is unstabilized height. Like, who knows, right? Now, we have that test run of the ruling. So that might work in our favor. People might buy in expecting hedge funds to collapse, which I highly doubt they will, because they would have already raised the capital days ago, weeks ago, months ago. That's why they give them so much warning, right? So, yeah, I don't expect anything to happen tomorrow, but because people think something's going to happen, they might try to make it happen. So I'm thinking perhaps we'll get a buy-in. We'll get, a rush up. Everyone's going to try to get in. Nothing's going to happen, but they'll produce the FOMO that they're thinking about, and then they'll FOMO on FOMO, right? So, I don't know. My money is kind of positive for tomorrow, but then what happens when they find out it's all bullshit and they've been lied to? They're just going to pull their money, right? But are we going to run up before that happens? Or are they going to find out because the after hours are really bad? And they're like, this doesn't make any sense. I'm not buying in. And then they nuke themselves tomorrow morning, right? Because it started off -5. It should have been an up day. I don't get it. All this Reddit DD doesn't make sense. And so they pull their money out of fear. Or they don't put any new money in, right? And this is why I can't tell you what's going to happen tomorrow. There's just too much variables. I don't control enough of the market to control those variables, so I can't tell you.
Thank you, everybody. Thank you for joining the briefing.
Yeah, who the frig knows? But judging by this stock, people tend to be more psycho than not. So they're going to try to drive this stock up more than likely. And then they'll find out they're wrong, and then they'll panic. Or they'll double down, which sometimes they do too. Forget panicking, buy more. It's crashing, buy more. So, fuck, who knows, right? Yeah. Yeah. Yeah, exactly. It's on sale until it hits 500K. Yeah. Get this guy here. He's huge. And he has this little umbrella. Oh, that he's putting on his neck because he doesn't realize he's on a camera. He's got his earbuds in. Probably a good guy. Just, oh, yeah. There's the goatee guy. The big backpack guy. The lady that has a super old laptop. One in every crowd. Holy crap. How long does it take this lady to come out? Like, fuck, that's 50. Jesus, that's like 30 minutes. There she goes. So this was an hour ago. But do we got closed captioning? Nope. Not going to give us closed captioning. Lame. Oh, this is just a Jen Panaski holding a news conference. But this was an hour ago. I was hoping for closed captioning, but there is none. All right. Well, so much for that. Germans. Okay. Well, let's kill that for now. Okay. All right. And then we have the economic one later today at 3, I believe. Or was it 2 o'clock? I think it was 3. Let me go check that. Okay, so at 2 o'clock. Yeah. So that's going on now. Okay. I was right. Okay. Got picture in picture. And let's update our thing here. Okay. Okay. Updated our title. Just like every other government official, they're taking their dear sweet time. All right, I'm going to quickly use the washroom while this is running its course. We'll watch this play out. This shouldn't be too bad. He's just going to talk about, the pandemic and how it affected the Federal Reserve and what have ye. But as long as he doesn't say anything new, everything should be fine, if not good. Still waiting. Just responding to some fan mail. All right. Trucking along. Is today the 22nd? Yeah. Okay. I'm not a day off. This guy's taking forever. That subscribe button doesn't exist anymore. It's not there. I got all this garbage in my face now. Because Google doesn't want to be liable for bullshit COVID ideas. Okay, let's adjust this and skewer. And then that will be our recovery line. So if we get back over this line, then our chances of going up are much higher. The longer we stay under the line, the worse things shall get. Oh. Still looking okay. These haven't gotten too much bigger. This could have been a warning sign, this red here, but the following reds are pretty small. Oh, here we go.
Good afternoon. The committee will come
Seems
to
too
order.
quiet. Let me see here.
Without objection, the chair is authorized to declare a recess of the committee at any time. I now recognize myself for an opening statement. I am pleased to welcome Federal Reserve Chair Jerome Powell. Thank you for being here today, Chair Powell. Today's hearing will examine
suddenly
the Fed's
louder.
response to the economic crisis caused by the coronavirus pandemic, the current state of the recovery, and what steps we must take to ensure a strong, sustainable, and equitable economic future. The pandemic resulted in the loss of over 22 million jobs. In March 2020, Congress passed the CARES Act, which allocated up to $500 billion for emergency lending by the Fed, including for loans to small and medium-sized businesses, as well as states and municipalities. The lending programs established by the Fed for these recipients helped prevent some economic damages, but were limited in their effectiveness. The Fed's Municipal Liquidity Facility sought to provide much-needed emergency lending to state and local governments, but the program's restrictions limited its impact at a time when many states and localities were in dire need. During the crisis, state and local governments shed 1.5 million jobs, and there is little evidence that the municipal liquidity facility saved jobs or led to their return. The Fed's Main Street lending program similarly imposed restrictions that made its loans unattractive to struggling businesses and partner banks. Today's hearing will help us learn from the shortcomings of these programs and the Fed's efforts to improve its future crisis response capabilities. The Fed has admirably highlighted the toll of economic crisis on the American people and its unequal impact on Black, brown, and low-income workers. The Fed's report last month on the economic well-being of the United States households in 2020 shows that Black and brown Americans suffered disproportionate economic pain last year. I look forward to hearing from Chair Powell today on how we can continue to make the recovery more equitable. Congress and the Biden-Harris administration have accelerated the recovery. As Chair Powell predicted in late March, the dramatic ramp-up in the vaccination campaign, which occurred as a result of the Biden administration's leadership, with support from Congress in the American Rescue Plan, has enabled, and I quote him here, us to reopen the economy sooner than might have been expected. The American Rescue Plan also delivered desperately needed financial assistance, which has been and will continue to be a lifeline for American families. The American Rescue Plan provided direct relief checks, extended unemployment, and increased health care access. And we have seen the results of that extraordinary action. Over the last 4 months, the economy has added over 1.6 million jobs, and new unemployment insurance claims have dropped significantly.
So I added in the lines based on what you were saying there. Backstop, I believe. Yeah. So the only thing that screws up the idea is that basically you had this little bump here. So if you iron out this bump, right, whatever time frame you want to look at, but the bump kind of sets you off on having a mangled W that people were talking about yesterday, right? And so if you keep with the mangled W, your top is actually going to be slanted. So it's going to be somewhere along this white line. If it's indeed, if you just keep ironing it out, you know, averaging it out, which you can do with like a, you know, an average, a moving average, right? Then this would look like a U shape, and the past is going to catch up with the future, and there's going to be a merge of things, which I can show you right here, like this, see? So you have the past is going to catch up with the now, and they're all going to merge, which speaks to a turnaround, right? They haven't merged yet, but you know, when they merge like this, right, there's your gap up, because your past or your now runs into your past, and then that's, you're oversold basically. Yeah. Now this is a lagging indicator, so it shows you what's already happened. Like here, it didn't show you it at all, right? It went close to pinching, didn't show it at all, right? So it's not hardly perfect, and people like to overfit a ton with the damn thing. But, you know, if this is true, if we have, this is the now, so the now has to go down, and then this is the past. So we need this to show some red, and then these will all clash together, and then that will springboard up. So, yeah. Yeah, I think we need to go sideways or down for this to run into each other, right? The past, Yeah, because the past is here. And so we're going into the past now. So if we go sideways as well, then the past should lift up as well. So yeah, either down or sideways, and it should run into each other. So what's likely going to happen is this is probably going to go like this. And then you're going to see the lines pinch after the fact, right? Because they're a lagging indicator. And so you're going to get the pinch like this, right? So there's the past, right? And then now catches up with the past, and there's the pinch, and then that leads to a takeoff, right? Yeah. And same thing here. You got your dip before the rip. If this was more pronounced, this would probably have a pinch. But anyways, so yeah, it's a possibility. You know, you got a kind of a U shape going here. You did just have a dip before the rip, right? So there's definitely a possibility here. So what I've drawn, since there is a possibility, let's go back. Okay, so get rid of this lines. Goodbye. Goodbye lines somewhere. There we go. So here would be the breakdown point. So this is the first U shape, which is where we are now. This is basically the second U shape, and this is the final U shape. So if these are the breakdown points, we would see red, hesitation, which proves these lines exist. And then if the hesitation doesn't go away, we roll down on these lines. So I'll leave it up and we'll see where we go. But what this is good is that now when we zoom in, we can see we're coming up to the decision point, right? So now we're at the decision point if we're going to continue or are we going to go travel down. But God, look at that fucking volume. Jesus. What is going on? Let me scroll out on the seconds chart. Look at the bursts, the crazy bursts of volume. And what? It's the same time too. What the hell? 10, 15. Oh, no, this one was at 11. This one was at 15. Okay. Interesting. Not exactly the same time. If the times matched, I would be a little concerned. So you can see now hesitation. So the line should probably be here. And this should be here. Yeah. I'm listening to this guy here in the background. He's just bitching about inflation. Nothing important. Yeah, I like the buildings as well. Chili is so good. It is definitely underrated. Holy crap. I'm not a big fan of beans, but it's just, you know, chili is so hearty. It's like a proper manwich. Like, oh, so good. Chili is definitely underrated. Oh, I can't do it. I know a lot of people that are like dill pickles to the max. I can take a heavily garlicked pickle, but I can't do hardcore dill. Actually, if you do have a recipe, I'll take it as well. Post it on Discord. My parents would drink it. Backstop. I thought you were going to make an Office reference. I've had a deep fried pickle. I didn't like it. I mean, it wasn't bad, but it wasn't. It's like a jalapeno popper. It's like, it's not bad, but it's not. But you should have made a reference there at Backstop to The Office. You see, the secret is that you have to let it marinate so all the flavors get together and get to know each other. And then drop it on the floor. So this guy's just bitching about China right now. Yeah, it's got to be crispy. I agree. Who wants to eat a snot pickle? So you can see that line is definitely a line. See how it's reacting to it? So we just kind of took a shot in the dark based on, previous crap. But you can see that line is true. So, not bad. Yeah, deep fried Oreo is pretty good. I think I've had that once. What was yours battered in? I think mine was in a cookie dough. So they made a cookie with an Oreo inside that's gone melted. Pretty decent. Ooh, bacon in the United States is up 13%. Cars up 30%. Holy crap. Rip America. Yeah, but that's what I was saying about a month ago about stagflation. The US is going into an inflationary period, but hopefully it'll be controlled. But because they're seeing stagnant behaviors, you're going to continue to grow, but you're going to grow so slowly that the inflation is starting to become a problem. But really, you can't go back to the other, which is just print money to prop up the economy. You got to ease back in and pay for it slowly, right? Got to pay off that Visa bill. Yeah. I don't know what I ate. Good job, Larry. True American right there. What was that? Don't know. Raccoon buttholes. I think that was George Carling. Americans will eat anything. You could fry up raccoon buttholes and they'd be like, damn good buttholes. Yeah. And so what this guy's advocating for is that I'm guessing he's Republican because he said the Democrats, but he's arguing that all the free money that they're using to keep people alive and, not force them to work when they have COVID, that they should take all that money away because it could go to better things. And it's like, yeah, like letting people die or, let them resort to crime because they have to choose between working and killing people. This is important. I think this guy is this going to be our guy? Yep.
Thank you, Chairman Cleburne. Thank you, Ranking Member Scalise and other members of the Select Subcommittee for the opportunity to update you on our ongoing measures to address the hardship wrought by the pandemic.
He's super quiet.
The economy has shown
There, you're going to fix his microphone.
widespread vaccinations have joined unprecedented monetary and fiscal policy actions in providing strong support for the recovery. Indicators of economic activity and employment have continued to strengthen, and real GDP this year appears to be on track to post its fastest rate of increase in decades. Much of this rapid growth reflects the continued bounce back in activity from depressed levels. The sectors most adversely affected by the pandemic remain weak, but have shown improvement. Household spending is rising at a rapid pace, boosted by the ongoing reopening of the economy, fiscal support.
Holy crap.
Accommodative financial
They need to up his microphone. I got this 20 decibels louder and I still can't hear him.
Business investment is increasing at a solid pace. In some industries, near-term supply constraints are restraining activity. As with overall economic activity, conditions in the labor market have continued to improve, although the pace has been uneven. The unemployment rate remained elevated in May at 5.8%, and this figure understates the shortfall in employment, particularly as participation in the labor market has not moved up from the low rates that have prevailed for most of the last year. Job gains should pick up in coming months as vaccinations rise, easing some of the pandemic-related factors currently weighing them down. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, despite progress, joblessness continues to fall disproportionately on lower-wage workers in the service sector and on African Americans and Hispanics. The Fed pursues monetary policy aimed at fostering a strong, stable economy that can improve economic outcomes for all Americans. Those who have historically been left behind stand the best chance of prospering in a strong economy with plentiful job opportunities. And our economy will be stronger and perform better when everyone can contribute to and share in the benefits of prosperity. Inflation has increased notably in recent months. This reflects, in part, the very low readings from early in the pandemic falling out of the calculation, the pass-through of price increases in oil prices to consumer energy prices, the rebound in spending as the economy continues to reopen, and the exacerbating factor of supply bottlenecks.
He just said bad
which
words.
have limited how quickly production in some sectors can respond in the near term. As these transitory supply effects abate, inflation is expected to drop back toward our longer-run goal. The pandemic continues to pose risks to the economic outlook. Progress on vaccinations has limited the spread of COVID-19 and will likely continue to reduce the effects of the public health crisis on the economy. However, the pace of vaccinations has slowed, and new strains of the virus remain a risk. Continued progress on vaccinations will support a return to more normal economic conditions. The Fed's policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. In response to the crisis, we took broad and forceful measures to more directly support the flow of credit in the economy.
I just bailed on my position here, just in case this Dow gets any worse,
more than $2 trillion of funding to
or we're traveling along this line now, this white line.
Local governments between April
so
and
I'll
December
buy back in somewhere in here.
This, in turn, helped keep organizations from shuttering and put employers in a better position to keep workers on and to hire them back as the recovery continues. Our facilities were designed as backstops to private credit marks, not as replacements. Once lenders and investors understood that borrowers would have access to emergency loans, conditions improved. For example, yields and spreads on municipal bonds started to fall dramatically following the announcement that some municipal notes would be eligible at our money fund facility and that we were opening the municipal liquidity facility. This is detailed in the charts accompanying my
I think he just said money laundering. Did anyone else hear that?
Months, issuance of municipal debt surged. Over the period from April to December 2020, state and local governments and other muni issuers borrowed almost $380 billion in the private markets at extremely attractive rates, and 2020 as a whole saw the highest volume of municipal issuance on record. We've deployed these lending tools to an unprecedented extent, and our emergency lending tools require the approval of the Treasury and are available only in unusual and exigent circumstances, such as those brought on by the crisis. Many of these programs were supported by funding from the CARES Act. Those facilities provided essential support through a very difficult year closed. We continue to analyze the facility's efficacy and to review the lessons learned from their establishment and operation. And additional analysis is included in my written testimony. To wrap up, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to support the economy for as long as it takes to complete the recovery. Thank you.
Thank you very much, Chair Powell. Each member will now have 5 minutes for questions. The chair now recognizes himself for 5 minutes. Chair Powell, as you have suggested in the past, our delivery of direct assistance to the American people, and I'm quoting you here, is going to wind up very much accelerating the return of full employment. You have also observed, and I'm quoting you again, the economic downturn has not fallen equally on all Americans. We have observed that in our own communities, and I know the Fed has extensive data that are backing it up and is looking closely at steps that can be taken.
His microphone's much louder, so hopefully that's good enough volume for you.
My question is, why do you believe that economic equity is important for the strength of our economy as a whole and necessary to successfully fulfill the Fed's core mandate of price stability and maximum employment?
Thank you, Mr. Chairman. So disparities in economic outcomes along various lines have been a persistent and growing feature of our economy for several decades. We can contribute to addressing those through our tools. It does, of course, take a much broader set of policies from the legislature to really make significant progress on this. So what we can do really is to focus principally on the employment mandate and to assure that we achieve maximum employment, which we now define as a broad and inclusive goal, meaning we will not just look at the headline numbers for unemployment, we'll look at all kinds of measures of unemployment, including unemployment and employment for various groups, ethnic groups, gender groups, and things like that. We'll look at it as a broad and inclusive goal. We will also, under our new framework, respond to shortfalls only in full employment. We will not raise interest rates preemptively because we think employment is too high, because we fear the possible onset of inflation. Instead, we will wait for actual evidence of actual inflation or other imbalances. So that's the most important thing that we can do. I mean, I think the point is that there's a growing realization really across the political spectrum that we need to achieve more inclusive prosperity. Real incomes at the lower end of the spectrum have stagnated relative to those at the top. Mobility across income spectrums has declined in the United States and now lags that of most other advanced economies. These things hold us back as an economy and as a country, and I do think these are important issues that relate to the overall performance of the economy and therefore are in scope for us to analyze and call out.
Well, thank you for that. You know, one of the primary goals of the Select Subcommittee is to ensure that our response to the pandemic is effective, efficient, and equitable. Now, I appreciate that the Fed, under your leadership, recognizes the importance of all three of these attributes for future economic strength. I'm not a social scientist by any means, but I am well aware that in past recoveries, we don't have to go all the way back to the 1930s to see this phenomenon. We saw it taking place in 2009. That recovery was slow because I feel we did too little when we should have been going bigger and bolder, which we've done here. And I appreciate the fact that you are recognizing that and helping to build America back with, under this rescue plan, this families plan, all these things that are necessary to make sure that all elements in our society come back, not just where we were, but hopefully beyond. And I thank you for the way you've handled this, and I look forward to continue to work with you on that. And with that, I'll yield to the ranking member.
Thank you, Mr. Chairman. Mr. Powell, Chairman Powell, if we can go back to the pre-pandemic and look at first where the economy was, how it was performing. Were we experiencing a record economic expansion prior to the pandemic?
Longest in our history.
And so we saw the lowest overall unemployment, is that correct?
That is, yeah. Well, since in 50 years, really.
Since the 1960s, let's say.
That's right.
How about how it was affecting everybody? I know we've had some that try to say it didn't impact all groups. We've seen other numbers. I've surely seen other numbers that showed that everybody benefited, but especially those lowest level entry levels. We saw record startups, African American unemployment, Hispanic unemployment at all-time records. Is that what you saw as well?
Yes, and really that started to happen in the last 2 or 3 years of the very long expansion, which shows you the benefit of a very strong labor market. We saw a all-time record low unemployment since 1972 or so when we started tracking it for African Americans and very low for Hispanics as well.
All right, and obviously after the Tax Cuts and Jobs Act passed, that is when we started seeing that happen. In fact, right before the bill was signed into law, we saw major companies, AT&T started, and then every day there would be more announcements of companies announcing bonuses and increased wages for their employees because of a more competitive tax rate globally. Did you see that same thing?
You know, we don't comment on the effects of particular bills, as you can imagine, of any kind.
I'll give you that, and obviously there's enough documentation of those reports as people would announce that they were doing it strictly because America had become competitive again. We had the highest corporate rate in the world. We made ourselves not only competitive, we had a 21% rate when the world average was 23%, and then we saw all of those great benefits. We also saw record high markets, didn't we?
We did, yeah, I guess.
So when we saw the government-ordered lockdowns, whether it's businesses, schools, didn't that ultimately hurt this record-setting economy?
You know, I don't know that I can say that. I mean, I think of course, the economy was very hard hit by the pandemic, and it's assigned to others to decide how we should have reacted. It's really not something that the Fed has expertise in or the ability to judge.
Would you say that the lockdowns were caused by a reaction to COVID-19 becoming a global pandemic?
Yes, yeah.
And did COVID-19 come from China?
I don't know.
Well, hopefully this committee will have that hearing on the origin of COVID. We won't have to wonder about it. Obviously, there's a lot of data out there that indicates not only did it start in China, but that it also started in the Wuhan lab. And whether it was intentional or accidental, that is a question no one should have doubt about when we could be having those hearings. So we'll continue to call for that. But you could see that straight line between the pandemic hitting from this virus that came from China and then the shutdown that had a devastating impact not only on lives, over 600,000 in America, millions worldwide, but also on this economic crisis that we're dealing with. Now I want to turn to the inflation crisis that we're seeing. As you can see right behind me, we've seen a dramatic increase in the cost of many household items, everyday items that families buy. Milk up 5%.
Yeah, this guy's definitely Republican.
Gas up 56%.
He's the people's champ, right?
Used cars up 30%, as we're seeing a shortage of products, harder for people to get products, supply chain
it's used cars, not new cars.
Workers.
That's a big difference.
We're seeing, as the result of that, about a 5% inflation rate recently. So I would ask you, Chairman Powell, is 5% inflation acceptable to you?
No, it's certainly not.
So clearly we want to address this crisis. Now, when you look with the unemployment crisis, there's 9.3 million job openings right now, which is a record high, Yet the economy only added back 500,000 jobs in May. We've seen the enhanced unemployment being a big factor in paying people. 40% of the people that are getting these checks are getting more money not to work than work. That was a policy decision made here in Washington, a very flawed one. You're seeing many states try to address it, but ultimately, as we have this labor shortage, as it's creating supply chain backups, as it's starting to get worse, especially on the inflation side, Chairman Powell, will the economy ever reach a full pre-pandemic level if this labor shortage continues?
Well, if it continues, I strongly suspect that labor supply and job creation will be moving up well over the rest of this year.
And I think that'll follow, as you see many governors, half the governors in the country now have decided to end on their own that enhanced unemployment, and that is getting people back to work in those states. Unfortunately, some states want to continue paying people not to work, and that's causing inflation in other areas. Hopefully we can confront this, address it. I wish you well as you...
So what he's arguing is that because slavery is now being abolished, the price of stuff is going up, and that we should stop paying people and put them back into slave jobs so we can have stuff cheaper again. That's exactly what he just said. Oh, my Lord.
So we can do something about the low.
There is no minimum wage right now, Mr. Chairman. They're giving bonuses to people to go back to work.
Yeah, I don't think the minimum wage people got bonuses, or did they?
I've seen wages in almost every state go up well above minimum wage.
Almost every state. Miss South Carolina, I'm sure they called Louisiana.
Not his state.
I know my restaurants in
Bitch,
New Orleans
not on my
cannot
neighborhood.
find
No one got
workers,
no
and
extra
they're looking
scratch.
and paying more than they were pre-pandemic, and New Orleans has got the best food in the world. I'm sure South Carolina is not far behind, but they would like to get those workers back too.
Yeah, Gallagher's is a little better.
He's getting
With
knifed
that, I'll
after
give
the
5
meeting.
minutes to Ms. Maloney.
Thank you, Mr. Chairman. Thank you. It's good to see you again, Chairman Powell. I want to start by asking about the Fed's monetary policy and inflation in particular. I'm very concerned that the Fed is going to raise rates too early, which would seriously harm the economic recovery. As you stated last week, much of the recent rise in inflation had actually been expected. I strongly believe that the recent spike in inflation will only be temporary, and that shouldn't cause the Fed to raise interest rates too soon. In the early months of the pandemic, prices fell incredibly low. So now a year later, the year-over-year rise in prices looks very high. But that was only because prices fell to artificially low levels last year at this time. This is something that everyone saw coming for many months, so shouldn't come as a surprise at all.
It surprised the Republican guy.
How much of the recent rise in inflation do you attribute to artificially low prices from early in the pandemic? And how much do you attribute to other effects like supply bottlenecks, pushing up prices, and a genuine rebound in economic activity?
Well, a pretty substantial part, or perhaps all, of the overshoot in inflation comes from categories that are directly affected by the reopening of the economy, such as used cars and trucks in particular. There's sort of a perfect storm of very strong demand and weak supply due to the reopening of the economy and various factors. We see airplane tickets, we see hotel prices, we see other things. Those are things that we would look to stop going up and ultimately to start to decline as these situations resolve themselves. They don't speak to a broadly tight economy and to the kind of thing that has led to high inflation over time. I will say that these effects have been larger
God, AMC
than
is
we
trying.
expected. And they may
I'm going to
turn out
have to
be
get
more
back in,
persistent
even
than
though
we've
I'm
expected.
still
But
expecting a little bit more red.
The incoming data are very much consistent with the view that these are factors that will wane over time, and that inflation will then move down toward our goals, and we'll be monitoring that carefully. Of course, we're prepared to use our tools as appropriate if that turns out not to be the case, to guide inflation.
Sweet God, that was a pendulum swing.
Thank you. Let me follow up
Look at
on
the
that,
seconds
because
chart.
we know that inflation
Oh, you can't see
statistics
it.
are fundamentally flawed
Hold
right
on.
now due to the pandemic. We
Look at
typically
that.
measure inflation
It, like,
using
they
a basket
ramped
of goods
up
and
and then
services
they
that
just
represents
fucking
what people
tanked.
usually purchase But the pandemic completely scrambled.
That's definitely
what everyone was
pendulum
spending
swing
money
right
on.
there.
People weren't traveling or going out to restaurants, so spending on those items stopped
here.
entirely, while spending on groceries surged dramatically. As a result, a lot of economists questioned whether we should be relying so heavily on inflation statistics that we know don't represent what people are actually spending money on. So my question is,
So her
do you have
statements aren't
any
completely
concerns
wrong.
with relying on traditional inflation statistics, which we know are unreliable right now in setting monetary policy?
Not a bad
I think
point.
the overall point is that the data that we're looking at in the labor market and for inflation and for growth, it's in such an unusual setting of reopening the economy. We have to be very humble about our ability to really try to draw a signal out of it, and it may take some patience to see what really is happening. Specifically on inflation, you're really talking about consumer price inflation, the CPI.
Yeah.
We actually use at the Fed PCE, personal consumption expenditure inflation, and that the basket is actually updated on a monthly basis for PCE, and that's one of its more attractive features from our standpoint. Still, at a time like this, when people are changing their their consumption patterns in ways that are outside of experience, I would say there's also a challenge there, even though our measure is in fact updating monthly in terms of its basket.
Good response.
Switching gears, I want to ask about the Main Street lending program. It seems clear that both the Main Street program and the municipal program generally improved credit access. Fed officials have acknowledged that the Main Street program would likely have been more productive with different bank incentives and more generous terms. And as you know, the eligibility threshold for the municipal program excluded many cities and counties that were deeply affected by the pandemic. What do you believe are the most important adjustments the Fed could make to the Main Street lending program to make it more effective in future crises?
So I would say the Main Street lending program overall was effective. It made a couple thousand loans, and it helped a lot of businesses.
Made a couple $1,000. It was good. It made like $50.
Take away a lesson there, it is that it's very difficult to reach small businesses across America, and I would look to the PPP program and things like that. A lot of these very small businesses didn't need unforgivable loans. These were statutorily unforgivable. They could not be forgiven. And so I would look in that direction going forward. In terms of
that was quite a wild spin, yeah.
Liquidity facility.
It was still looking red, and they just floored it, and I was like, oh man, I'm missing out.
Resounding success.
Nope.
And the test of it is not how many loans we made. The test of it is how much lending took place. The municipal markets were collapsing. There was no lending going on. The people who put their money in those funds that wind up making all the loans were taking their money out. We announced the facility, and all of that turned around.
Let's see.
By through much of last year.
I think we're okay still.
Municipalities, states had great
access to
the market, including ones with relatively
we can reattach to the line. How much time do we got?
Took place at
yeah, we might do
it. So it really worked. I mean, it really
it's almost horse betting time.
Backstop is better than a direct loan in a lot
of
cases.
It just called you out, backstop.
We would look at it that way, and I think that's the way it's generally seen.
My time has expired. Thank you. I yield back.
Thank you, young lady, for yielding back. The chair now recognizes Dr. Miller Meeks.
Thank you, Mr. Chair. And Mr. Powell, thank you so much for coming before us today and for your testimony. There has been, I think, first and foremost, that the improving economic position we see today,
all right.
do you think that it would be in existence without Operation Warp Speed and 3 safe and effective vaccines?
I think that the vaccines and the widespread adoption of them are absolutely essential to the recovery.
Thank you. And
at least this guy's smart.
About 40% of workers on enhanced unemployment are paid more than they did while they were working. Coincidentally, there is a labor shortage. In my home state of Iowa, as of May 2021,
no one cares about your home state.
Workers dropped out of the labor force since February 2020.
Quit pandering.
A 5% decrease in the size of Iowa's workforce. Notwithstanding, employers in my state cannot find workers. And these are jobs that are greater than $15 an hour. Even some employers cannot find people to work at salaries of between $80,000 and $130,000. As Governor Brainerd pointed
go
out
figure.
earlier this
People don't
year,
want to work for
true
slave
unemployment is
wages.
far higher than the headline rate, and the labor force participation rate is nearly 6 percentage points below where it was at the beginning of the 21st century. Shouldn't we be doing everything we can to
People realize they
incentivize
don't
work
have
for
to
our
work
own
slave
citizens,
jobs. They're
shouldn't
wisening
we
up.
be, looking at bringing in
Maybe you have to pay
additional
more.
unskilled workers
Gasp.
into this country at a time when we have a
Supply and
labor
demand,
shortage of
bitches.
skilled workers?
If everyone refuses to work for $14 or less,
So
minimum
a
wage
number
is
of
going through the
things
roof.
We think are weighing on labor supply right now, and those are things that should be expected to abate
Get with the program,
wane
bitches.
and go away over the course of coming months. So we should be seeing our way to strong job creation, we think, as the year goes on. And there I'm thinking of a significant number of people still report themselves as not wanting to work because
Watch
they're
him
afraid
flash
to be
like an
infected or
AMC
being
signal.
afraid of carrying the
Okay,
infection to
that
somebody
looks like an
they
A
live with
shape
who's
in his
vulnerable.
hand. He's trying to say
Also,
AMC.
schools not being open,
A,
that's
3
weighing
fingers
on
is M.
participation by
He's
caretakers.
counting them right now.
And
See,
then-
3.
and also,
Now he's going to give
unemployment
us the
insurance
C
may be
symbol.
interacting with some
Right
of
there,
those
the other hand.
other
There's the C.
factors and
Shit.
causing people to go on with their
We're
job
cracking the
search
code.
longer. There's another thing, though. The very quick job gains of the early recovery essentially involve going back to your old job. That's not so much what's happening now. Now it's actually finding new jobs, and that's a matching function that is more labor intensive and time consuming, and there may be a bit of a speed limit on that. We expect, though, as I said, a lot of progress to go forward.
Yeah, I'm on it.
On
See?
immigration, it's something we really
Yep,
isn't.
there's
in our
3
bailiwick,
fingers, M.
and, so I try to stay at a
Keeps
high level
flashing
on
it to
a question
us.
like that.
And President Biden promised not to raise taxes on anyone making under $400,000 a year, but inflation, as has already been noted, has increased dramatically. And I realize you use the PCE rather than the CPI, but it's over 5% and is most insidious and regressive tax affecting low-income minority families, hardworking taxpayers, and seniors on a fixed income. You stated recently that the current inflation
M for more
trend is
money.
likely to
You
be
got it.
transitory. Does likely mean greater than a 95% chance, a 50% chance, or do you have any level of confidence
Well,
in that
in
prediction?
Canada, our
I
perception
have a
of
level of confidence in that prediction. What I would have been saying, though, is that it's very hard to say what the timing of that will be. When will these bottlenecks disappear? When will there be enough microchips? We saw what happened in the lumber business. Prices have come way down, but they're still pretty high. When will the used car markets get back into equilibrium? So it's hard to say exactly when it will be and exactly.
he sounds a
how
lot
large the
like me.
effects will be.
We know
But
it's going to happen.
honestly,
We just don't know
if you
when,
look at
because
look behind the headline.
who the
look
fuck
at the
knows, right?
categories where these prices are really going
Exactly.
up. You'll see that it tends to be areas that are directly affected by the reopening. That's something that we'll go through over a period that will then be over, and it should not leave much of a mark on the ongoing inflation process. So
Yeah,
there's
exactly.
no reason why it should leave a mark on inflation, say, a year or so ahead, because we should be through it then.
Thank you. And finally, the financial report of the United States government
Basically exactly
published
what I'm
annually by
thinking.
the Treasury Department says unambiguously the current fiscal path is unsustainable.
This should be-
When our
this should
current
be green.
Debt is projected to exceed 6
Good
times
response.
GDP by the end of the century, and annual government spending will exceed 50% of GDP. Do you
I'm gonna
agree
get
with the
in,
conclusions
and
of
I'm
this
gonna
report?
hope
And if
for
so,
a
isn't this
run-up.
an additional and one of our greatest avoidable crises that our country currently faces?
Oh, wow, good timing.
I think it is unsustainable just means that the debt is
Worst
growing
timing
faster
ever.
than the economy. That's been the case for a long time, and I don't think that's controversial.
Good
I
timing.
think the point I would make is that the time to work on that problem will come, and that time is when employment is high, unemployment is low, economic activity is strong, taxes are rolling in. That's the right time to go to work on a longer-term program that gradually moves us back to, primary balance, and ultimately, you just have to get the GDP growing faster than the debt, and it has to do that for an extended period of time. That's how countries get back to a sustainable path.
And to be mindful of their
Yeah, we
spending
should
when
go
the
up.
economy is growing. Thank you so
A little
much.
bit
I
of a
yield back
sell
my time.
there. We should latch.
Thank you, gentlelady, for yielding back. The chair now recognizes Mr. Raskin for 5 minutes.
Thank you so much, Mr. Chairman. I'm sorry that you were harangued again this morning about the origins of the coronavirus. I'm very eager also for the House Committee on Science to take up this scientific question. And also, deal with the fact that I have emphasized since the beginning that Donald Trump repeatedly defended the performance of the Chinese Communist Party and General Xi in COVID-19 in February, in March, in April, and May. For many months, I think on 19 different occasions, he defended them as doing a great job and a wonderful job and praising their partnership. So I'm very eager to get to the bottom of it, regardless of whether the virus came out negligently, recklessly, or deliberately. None of it excuses the lethal recklessness of Donald Trump in his complete mismanagement of the coronavirus.
You're using all your time.
In our country. And of course, we lost hundreds of thousands of people before he left office, and we got organized to crush the disease finally. Mr. Chairman, welcome to our committee. I was taken with something that you said in February when you said what it takes to drive productive capacity to raise living standards over time is investment in people's skills and aptitudes, investment in plant and equipment, investment in software. Do you agree that investing in our nation's infrastructure will increase our productive capacity and contribute
the dude's
to
not
long-term
biased
economic growth in the
overkill.
country?
Mr. Raskin, I want to start by saying I don't
His
want to
point
be
is valid, regardless of which way you slice it. The kill count
I think it's basic economics
is
that
nothing to be scoffed at.
Productivity is what and demographics are what drive longer-term growth in a country. And one of the big ways to affect productivity is through investment. And that includes infrastructure, includes plant and equipment, in people, education, skills, things like that. So I think that is a point that I was making back in February.
Don't start talking each other
here.
here.
A specific example, then, and maybe
This
you
is
can help me with
politics,
it.
right?
30 million Americans
all
live
good.
in areas with inadequate
We're going to have
broadband,
different opinions here.
severely limits their abilities to do their work, to develop their businesses, to participate equally in school. I've had high school kids tell me they have to go to McDonald's or Starbucks in order to get internet that they can use for their assignments.
That's more of a problem with your parents.
The American Jobs Plan would
But
make
then your school should have fucking
investments to
Wi-Fi.
expand
That's basic.
broadband to these rural communities like Frederick and Carroll County in my district. And I know
Damn.
that you don't comment on specific legislative proposals, but would you say that in general, expanding high-speed broadband
Amen,
access
Sam.
to millions
Although
of
I wouldn't want to
Americans
live
who
with
don't
her.
have it, especially in rural areas, would create new economic opportunities and potential for long-term.
Whoa. Bring back child labor.
Without commenting on particular
If
legislation,
I've learned
I
anything
think
from
I
Parks
would
and
look
Rec,
at broadband like that,
child labor
in
rules
the
need to
same way
be
that prior generations looked at electricity.
redone.
If kids don't have access to the internet and to basically all the knowledge that's available through that, they're not going to be able to maximize their potential or realize their potential in this economy.
Well, I mean, that's a fascinating answer to me because when I tried to look at it historically, it seemed like the definition of infrastructure has expanded over time. And, you know, when Eisenhower said, let's build the highways, people said, what's that got to do with infrastructure? Infrastructure is bridges. And, you know, when President Lincoln did the land grants to do university and colleges across the country, people said, what's that got to do with infrastructure? And so it does seem like the definition of infrastructure changes. What is your working definition of infrastructure as an economic concept?
I hadn't taken the trouble to really write one down, and I wouldn't like to do it in real time here, if I can avoid that.
Okay, well, or let me just pose it then in kind of a more abstract way. Would you say that infrastructure is anything that allows for the expansion of productive
I'll be
capacity
taking your
and
bets
contribution
if you
to
got
long-term
some.
economic growth?
I don't see anything objectionable about that.
Yeah. All right. Well, I just very much appreciate your emphasis on investment because that's what we've been doing with the American Rescue Plan. That's what we want to do with the American Families Plan. It's what we want to do with the American Jobs Plan. We want to reinvest in America to keep those jobs here in America and to invest in our communities so we have a solid foundation for the continuing growth of the great American middle class and for the opportunity for lots of poor working people to get into the middle class. And with that, I will yield back to you, Mr. Chairman.
Thank you, gentlemen, for yielding back. The chair now recognizes Mr. Jordan for 5 minutes.
Thank you, Mr. Chair. Chairman Powell, the Fed has two mandates, right?
Maximum employment and stable prices.
Maximum employment and stable prices. Seems like both got some problems today. I want to spend a little time on the first. Why are the jobs numbers so bad right now?
Well, I think we're digging out of a very deep hole. We've made a lot of progress, but I would agree with you. We have a long way to go.
Over 9 million job openings. Over the past 2 months, only 800,000 jobs added back. That's pretty bad. Is there a specific reason you point to as why those numbers aren't where we would, frankly, hope they would be?
You know, it's a good question, and my thinking is that there are some temporary factors that are weighing on job creation, and I mentioned those earlier. Another thing is actual hiring is at very high levels, but it's being offset by high levels of quits and retirements. So the net, what's happening is that the net job creation has been lower, but actual hiring is high. And that's, in a sense, quits is a good thing because people are looking for jobs that they want more. Retirements are just something that happens.
What about unemployment benefits? Does that factor in as well?
It may be a factor, you know, and it'll be a temporary one because something like 15 million people will see either those benefits disappear or significantly decrease.
My understanding is the state plus the state unemployment plus the federal enhancements, $37,000 a year. Might that discourage people from going back to work?
You know, we're going to find out. We're going to find out because it's going to be gone really quickly.
I think we are finding out. You add in the stimulus package, child tax credit, family of four, it's about $110,000. I mean, every single employer, literally every single employer I talk to in our district, and frankly, employers I talk to around the country tell me they can't find people to work. And you think it's more of quitting and retirements, or is it more unemployment, or a combination, or what is it?
I think in terms of things that are weighing on people getting in the labor force, I think it's those three things I mentioned. It's still some people are still afraid of COVID. Maybe they're living with someone who's vulnerable. It's also schools are closed still, and having schools be open again will free up a lot of caretakers. I think unemployment benefits too. I think if you would expect a really strong set of jobs numbers coming up beginning in the next month.
Didn't you expect higher numbers? Didn't you expect higher numbers in April and May?
Yeah, I did.
Which, I mean, it sort of surprised me. I guess when you pay people not to work, you shouldn't be surprised when you don't have workers. I've never seen a situation like this where we now have, as the ranking member mentioned, we now have several governors, 25 I believe, who've turned back. We said we don't want the federal enhancement to unemployment. I've never seen that. I've been in politics 26 years. I've never seen governors turn down federal money. So I think that just underscores how serious the problem is. But you said you think it changes soon?
Well, we know that these benefits run out on the federal ones.
What if the Democrats renew them, which they're talking about doing?
Excuse me?
What if the Democrats renew them? That'd be a problem, wouldn't it?
Again, I don't comment on
No, what you said you expect it to run out and that will help. I'm asking you, that's not what Democrats are saying. They're talking about renewing them. And if it helps if they run out, if they renew them, won't that hurt?
Well, these are judgments for people who stand for
No, I'm just following your logic. You said if it runs out, that will help the employment situation. I mean, I got employers.
I think we'll see strong job creation in the fall. I really do, and I think there are all these, as you point out, 9.3 million job openings, many millions of people unemployed. There seems to be some kind of a speed limit. It may just be that it's hard to match up with a new job, and people feel like they can wait a little bit longer and really shop carefully.
It seems to me, Chairman, and again, I know you're not going to comment on policies, but I don't know if the Democrats are doing anything right. They kept the economy locked down. They're spending money like crazy, proposing more, I think a $6 trillion budget the White House is proposing, all causing inflation. Inflation's went up the last 4 months, continues to increase. As we said, you got two mandates at the Fed, stable employment, low inflation. We got unstable employment, we got high inflation. And now they're paying people not to work, and that may continue. And then finally, on top of all that, they're thinking about raising taxes. I mean, this is amazing to me. First, you pay people not to work, and then the folks who are working, you're going to raise their taxes, and somehow they think that's going to help our economy, when, as I said now a couple times, every single employer I talk to tells me they can't find people to work. What do you think about all these policy ideas from the Democrats?
Again, it's not my job.
No, but your job is stable employment and low inflation. Right now we have 9 million job openings and inflation that's went up 5 months in a row. So something has to give. I'm not necessarily blaming you. I'm blaming the Democrat policies. And it seems to me the idea that they're going to extend the federal enhancement makes absolutely no sense. The idea they're going to raise taxes on hardworking Americans makes absolutely no sense. And the idea they're going to spend $6 trillion also makes absolutely no sense. So as I said, it seems to me they are doing everything wrong, making your job that much harder. With that, Mr. Chairman, I yield back.
It's a good thing, too.
I don't give comments when you make your statements. Tell me what I said wrong in that statement.
It's a good thing that you're yielding back so I can give 5 minutes to Mr. Foster.
It's a good thing I made those points about how bad the Democrat policies are. That's the good thing. And we'd like to answer, it'd be nice if the Fed chairman would answer the fact that if you guys extend unemployment, which he said if it goes away will be good for the economy, and if you extend it, he wouldn't answer that question.
With that, I yield 5 minutes to Mr. Foster.
Thank you, and I sympathize with the chairman sort of being left speechless by the logic that we just saw demonstrated. I'd also like to respond to some of my Republican colleagues about the origin of the coronavirus. The Science Committee Investigations and Oversight Subcommittee that I chair is in fact having a hearings on the origin of the coronavirus. The first is scheduled July 14th at 11 a.m. These hearings are going to be science-based, and I think it says a lot about how seriously my Republican colleagues take science that they cannot even find a complete set of members to serve on that committee, on that science subcommittee. They have only 2 members, the ranking member and Representative Sessions. With that out of the way, I just want to thank you, Chairman Powell, for your testimony. You correctly note the importance of the successful vaccination campaign. Under the Biden administration's leadership, we've now administered over 300 million vaccine doses, and COVID infections have fallen dramatically. The CDC has advised that vaccinated people can safely engage in a wide variety of activities, and states have been able to do that and ease coronavirus health restrictions. And when they do that, our economy recovers. I think it's clear to everyone that the return on our investment on vaccines, starting with money and directions provided by Congress before Operation Warp Speed was even announced, and following decades of federally funded research into the underlying science, has had the highest return on investment of really any that our country has ever made. Would you agree with that?
I don't have a number to put on that, but yes, I would think the return on investment would be high.
But the return on investment is not limited to vaccinating the United States. We also benefit economically by helping vaccinate our trading partners. Would you also agree that the return on that investment is likely to be very high?
I would, yes.
Yes, and would you be willing to have some of your brilliant economists that work for you actually try to put a rough number on that? Because it's an important thing for us to appreciate as we decide how much of resources to devote to helping our other nations around the world.
I will be glad to do that.
Thank you. And now, you know, with COVID, our economy has experienced a number of inflation shocks. You know, the tight labor markets, commodity shortages, release of pent-up consumer demand, chip shortages, as you mentioned, due to underinvestment in foundries and overinvestment in Bitcoin and meme stocks. Proposals to move onshore the supply chains that have historically been offshore, which will, in general, increase prices. And all of this, however, happens against a continuing backdrop of long-term technological job loss that was arguably accelerated by COVID. So how do you think this is all going to net out when the transients are over, the longer-term, say medium-term effect of inflation?
I mean, it's incredibly hard to say, really. You know, if you're positing an actual reversal of globalization, that could have implications, as you suggest. But I wonder if that's really going to happen because of policies that we adopt. You know, the technology goes instantly around the world. It's not going to be easy to stop that. The economy's become very globalized. And also, you know, production technology is so much more efficient than it was. You can do things, you know, with the new technologies. You can manufacture things here. It may or may not result in a lot of jobs in manufacturing, but you can certainly make things. There may be reshoring here that's actually quite efficient. in terms of costs.
So
it's
the jobs will
make,
come back to the U.S., but they'll be taken by robots, sort of is here. Which
there is some of that.
There's some of that, yeah.
In manufacturing, as you know.
Yeah, and so that's so you're really maintain some uncertainty on how this is going to net out for the inflation.
A lot of uncertainty, yes.
Yeah. Okay. Let's see. In my last thing, you know, you've been talking a little bit about high-speed broadband, which is, I think, an important investment with huge return. An important part of that is that when Americans get for the first time access to the internet, that they're also provided a secure digital ID that prevents them from becoming victims to identity fraud and allows them to safely participate in our economy. One of your other projects you're working on, central bank digital currencies, is going to need to have a secure digital ID to allow people to transact in digital dollars in a safe way that can't be abused. And are you working internationally to try to get these secure digital IDs, you know, as part of your negotiations on central bank digital currencies and others?
I think it's part of the discussion. I would say we're not as far along as your description would suggest on that, but that's it's certainly something you would need to be able to have a.
Will it be addressed in your white paper coming out this summer?
A lot of things will be addressed. I'm not sure if that would be it. That's something you certainly need that to down the road. We probably will be. We're just laying it out right now.
Yeah, no, it's important for our economic recovery as well as planning to respond to China, frankly, on central bank digital currencies. So move it up on your to-do list. Thanks much, and I yield back.
Thank you, gentlemen, for yielding back. My understanding is that Dr. Green has joined us. If so, he's now recognized for 5 minutes.
Can you hear me, Mr. Chairman?
We now hear you, yes.
Okay, thank you. Sorry about that. Thank you, Chairman Clyburn and Ranking Member Scalise, and I want to thank Chairman Powell for being here today. You know, last summer when the former Fed chairs, Bernanke and now Treasury Secretary Yellen, testified before this subcommittee, I expressed some concern that the excessive spending by Congress and money printing by the Fed might cause inflation. Mr. Bernanke denied this, saying that people said there'd be inflation in 2008, but they were wrong. Mr. Chairman, the numbers are in, and it looks like there's some inflation, at least the past couple of months, 4 and now 5%. When Congress spends trillions of dollars and the Fed prints money, something's got to give. You know, prosperity isn't created by government. I don't believe it's created by workers, by businesses, by entrepreneurs, creating and inventing, innovating. You know, I founded a healthcare company, grew that company up to over 200 million in annual revenue in just 8 years, and I have a little bit of experience on understanding how to create jobs, grow business, et cetera. And I genuinely believe those businesses out there are looking at this inflation as a tax. Now, it's a hidden tax, but they see it as a tax on their ability to B2B transactions, where B2 customer. Every dollar the government spends has to come out of somebody's pocket, whether it's through another tax or a reduction in their purchasing power, it comes out. And if we don't get our fiscal house in order, I worry that inflation won't be transitory, as I know you've said both in the press and probably here today, and I apologize for being a little bit late. But my first question, Chairman Powell, are you concerned from an economic and really a national security perspective about Russia and China dumping the dollar and what appears to be a move to some kind of financial alliance between the two of them?
You know, that's not something that's really within our bailiwick or on our radar screen. You know, the dollar is the world's reserve currency. There really is no currency that's close to being able to compete. That's because of our democratic institutions and our record of maintaining low inflation, and because we have open capital markets and are great traders with the rest of the world. I don't see anything changing in that anytime soon.
Do you see the threat of raising the capital gains tax to 40% as a challenge to those capital markets?
And you know, again, I really don't comment on tax and spending proposals. We don't have any authority over that. whatever the level of capital gains tax is something that is the business of elected officials, not the business of the Fed.
I appreciate that. Over the past 10 years, the federal government's net interest costs have grown about 25% relative to GDP, despite the historically low interest rates. If spending remains on its current trajectory and interest rates reach their historic average of 5.7%, do you think the federal government will be able to pay its bills?
I have no question that the U.S. government will be able to pay its bills for the foreseeable future. There's no case in which that would not be the case. We have the strongest and largest and most flexible economy in the world. It's also true, though, that we're on an unsustainable path and that we're going to have to address that. And as I mentioned, the time to address that is when the economy is strong, unemployment is low, and economic activity is high.
Is it possible that the high interest rate that we're seeing today is the start of something that could be as bad as the 70s? And if not, could you explain why?
You say higher interest rates or higher inflation?
Inflation, I'm sorry. I missed.
Very, very unlikely. What we're seeing now, we believe, is inflation in particular categories of goods and services that are being directly affected by this unique historical event that none of us has lived through before, called reopening the economy after closing it. So you see extremely strong demand for labor, for goods, for services, and you see the supply side caught a little bit flat-footed and trying to catch up. And you see bottlenecks and you see this all over the world, by the way. This is not just the United States. You see it everywhere, and it's very similar kinds of situations. And you have a central bank that's committed to price stability and has defined what price stability is and is strongly prepared to use its tools to keep us around 2% inflation. So all of those things suggest to me that an episode like what we saw in the 1970s, and I graduated from college in 1975. I had a front row seat. That nothing like that. I don't expect anything like that to happen.
Okay. Mr. Chairman, I can't see the clock, unfortunately. I don't know if I have any more time.
You are out of time.
Okay. Thank you, Mr. Chairman. I yield.
Thank you for yielding back. The chair now recognizes Mr. Christian Martha for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for appearing before us. Back in 2019, you said the following. You said, we try to create a strong labor market. For many, many people and many, many communities, that's enough. But for people who are at the margins, the low to moderate income community, that's not enough. They need a chance. And earlier that year, you said you were cutting rates in part to help those who are, quote, left behind. How do you see the impact of the pandemic on these groups of people for whom you expressed empathy and concern back in 2019? And how do you see the recovery affecting them?
Well,
I can handle debates.
The pandemic hit the service industries very hard. It's industries that involve dealing with the public, hotels, travel, entertainment. And the people in those customer-facing, public-facing jobs, they tend to be relatively low-paid jobs, and their minorities and women are significantly overrepresented among the people in those jobs. And that's who got laid off. Most of the layoffs, a big chunk of the layoffs, disproportionately, were in those industries. So it's clear this pandemic really hit those people hard. And why it was even more painful was that in the last couple of years of the very long expansion that ended in March of 2020, the longest in our history, you really began to see benefits going more to those groups.
But the temperature definitely needs to dial back there. Because once you start putting people's names into it, and that goes for both sides, then it starts to get personal, and then people get defensive, and then you get defensive about the defensive. So, there's no point dwelling about it, but, asking politely many times to... you got to tone down the personalization of it.
Those industries are
because I thoroughly disagree with Tom's viewpoint on
in those industries of where employment
minimum
was.
wage because it's a utopian idea, right?
Really high, very
that
large numbers of job
that
openings
businesses are
in
going to
a
look
number of
out for their
industries, including the
employees in
service
any
industry.
way.
So
If they could
I
pay
really am
them
hopeful
peanuts,
with
they
the-
would.
with
If
the
they could
strength of
enslave them
labor
for
that
free,
really is
they would.
remarkably
Right?
strong,
It's
that
because
over
a business
time,
is
and not a lot
driven
of
for
time,
profit,
this will sort
and it's
itself
not
out, and we'll find
profitable
ourselves in a
to
very, very
raise up an
strong labor
employee
market
when you can
with
just
low
rinse, repeat them,
unemployment,
and then
wages going
finally
up
find
across the
someone that's going to
spectrum.
work for 10 cents, right?
I jump
So
in
at
for
that
one
point, the
moment,
government
which is
has to
thank you
come
for
in
that
and
answer.
protect the employees who
You were
would be
talking
exploited.
about the
And,
matching
the
function
counter
that's
argument to that
happening
is,
right
well,
now
that wouldn't
between
happen.
people who are
And if
perhaps
we go back to
dislocated and people who-
1800s and
I mean,
early
the job
1900s
openings that
Britain,
exist.
this was happening.
What
And
is
people
your
were grind up to
perspective
machinery,
on
and it was
efforts
their fault.
by,
They got in the way of the gears.
educational systems working with
And so
governments,
unions
state,
came
local,
in,
federal,
and you had a labor
in
movement.
upskilling
You had an entire
people
country
to match them
formed on
with the jobs that
labor,
currently exist in the
communism,
post-pandemic
basically, right?
economy,
To bring up
through
working
skills-based
conditions, right?
education or
And
career
hence minimum
technical
wage came
education
to
and the
be.
like.
Not
been
that I
exposed to
agree
a
that
number
it should
of
be
programs of that
$15,
nature, and
but
they seem to work really
there's a lot
well.
more to the
Some of
story,
them do
right?
anyway.
But
The
anyways,
idea being
point is
companies,
that's debatable,
actually see
and
it in
hence we can
South
have
Carolina
debates.
quite
But
a
as soon
bit.
as it gets
You see
personal,
companies
and
teaming up
I
with-
call Tom
with
out for
schools
having
and technical
crazy
schools
utopian views,
and
and you
apprenticeship
smell like crap,
programs,
and cabbage,
they really
and pea
work.
soup,
I would
and a
say
hamster, and
that's a great
elderberries,
idea, and it would be
then
great to
it
see
gets
more of it all over the
needlessly
country, but, you know,
insultive,
those-
right?
those things
You're
take
not
time,
talking
they
about
take policy
the
support,
problem.
they'll take
You're
time
going
to
after
really
the
build
person, and that's
uh,
not
produce
good
value,
for
whereas this
anyone
is
that has to
something, you know,
read the
we have
chat,
the immediate need to
especially
get
me.
people back to work.
Yes,
I don't want to
sir.
be looking at stocks and have to
Last
read
question.
through filth,
What
if
is
you
the
will.
impact
So,
of other countries
if it can be
in the
avoided,
world
let's try
not
to,
getting their
not call
populations
each other out,
vaccinated at the
even
rate
if you
that we
disagree,
are, and the
with
COVID
their
fires
core
continuing
tenets
to
of whatever
rage over
they
there?
got
What
going
is the
on.
impact
Just
on
got to keep it
our
impersonal,
economy? And if you have any
or we'll all start
metrics
attacking each
that,
other.
can measure that, or
yeah.
that you'd
Anyways,
be willing to share,
so
I'd
that
be
being
very
said,
interested in that.
I don't have any metrics,
freedom,
but I will
freedom,
say
freedom,
what,
freedom.
and to Mr. Foster's earlier point,
Even though you've been grievanced,
we're to the extent
you got to let it go,
large
because if not,
countries
you'll just
around-
keep the
large
cycle
populations
going,
around the
right?
world not getting vaccinated. We're giving time and
You
place
shouldn't have been
for
muted, but obviously a
new
person felt that
strains
that
or
was their
virulent
only course of
strains of the
action,
virus
right
to
or
develop
wrong.
and spread. Viruses
I
do not
argue
respect
wouldn't have
natural-
muted you,
national
but
borders.
you
And
know,
so
it happened. So
I
just
think it is
let
very
it
much in
slide,
our
and we
interest
can move on.
to
If not,
support
this is
broad
just going to keep
vaccination
going
around
around
the
in
world.
circles.
It's also the right thing to do, but it clearly is the best thing for us as well, because
Okay.
you know,
No,
no
I'm
one
not.
is really
I'm not
safe
saying you're
until
butthurt. I'm
we're
just
all
saying it will get
Very good.
butthurt.
Thank you
right?
so much for your service, sir.
Thank you for your service.
Thank the gentleman for
The fuck is he, a Marine?
yielding back. The
Sir,
chair
you
now
serve
recognizes
valiantly,
the ranking
pushing
member for
numbers and
a closing
all those
statement.
spreadsheets. Oh God, it brings a
Thank
tear
you,
to my
Mr.
eyes.
Chairman. Appreciate the hearing. Chairman Powell, appreciate the work
People
that
just
you
don't
do.
understand
Obviously,
your
some of the
sacrifice for this
questions
country.
that we have, both Republican and Democrat members
Oh,
had, are
my
more in
Lord.
the policy realm, which is not your purview. You have tools.
American
as-
politics, though,
as
is
the chairman of
entertaining.
the Federal Reserve. You have mandates, as I know Mr. Jordan and you were talking
Does
about.
anybody have any more bets
But
since
many
we're
of those
getting close to the
tools are
cutoff?
harsh tools that we don't want to have to get
Exactly.
to if we don't have to. And I think that's really where we as policymakers need to step
Exactly.
up and do a better job so that it
And
doesn't
yeah, you can
fall in
see
your
my
lap.
my take as
And I
being
think
a
those points are
Canadian.
made
Like,
clear. And if you look
I
at
don't
just
I don't
the
fucking care.
mandates of the Federal
You know,
Reserve,
all of this
maximum
is.
employment and
There's a
stable
lot of
prices.
grandstanding here.
Right now, we don't have either.
A lot of these guys
And it's
are
because of
incredibly
policy decisions.
one-sided, but they're
Policy
pandering to their base, right?
Primarily by the Biden administration.
Like, oh, look
Paying
at those
people not
cars.
to
Who the
work
fuck gives a
is
crap about
causing
used
real
cars
damage
going up
to our
30%?
economy. You
Oh, oh,
can't have
the poor
9
people you
million
represent,
openings
right?
for jobs right now.
And
At the
we
same
know
time
that the
we're
cars are
paying
going
people
up because
on
everyone
average
wants a car and there's
$35,000
not
a year
many
not
cars to
work,
give
and then wonder why we
because
have 9 million
no one
job
used their
openings.
cars. They're not
pretty
wearing
clear.
out. So
Every
yeah, there's
small business
a
in
couple of
America will
months. This
tell
is
you
going to be
why.
a
I hear
little
the same
off.
thing
But no,
across
no,
the
the
board.
world's ending.
They can't get all their workers
It's,
to come back. And
it's the
because
same
of that,
problem
they
I have
can't
with
open
the
their
YouTube
business
hype
fully.
machine, right?
Restaurants who are
Everything is
struggling,
tomorrow. Everything's next
scrapping and
week.
clawing to
Oh my
hold
God, it's all
everything
coming. They
together.
can't see the
Want to
forest through
reopen
the
fully,
tree
and many
that they
states
just
are
ran
able to reopen
into.
fully, but they
And then they're
can't
like, oh my God,
because
there's
they
so
can't
many
get all of
trees.
their
We're all
workers
going to,
back. And it's
if
not
you
like
take
they've
10
gone
more
on to other
steps,
places.
the
They
forest
know
is gone,
exactly what's
man.
happening. They're being
So
paid more not to
anyways,
work
it's what's going on
than to
here.
work. That
But I want to
policy
hear
has
what
to
J
end.
Pow
You
is
can set it.
talking
When
about,
the
because that
benefits
guy's
run out,
clearly got
it will help.
intelligence.
Problem is,
Even if these guys
Democrats
are
here in Congress don't want those benefits to end. And we're borrowing that money from
Yeah,
our
it's
children.
because
and
you
our
know everyone in
grandchildren
Congress,
to keep
Mr.
people out of
Scalise.
the workforce. It makes absolutely
You
no
know what
sense.
they're
It
thinking,
undermines
every single one of
your
them.
very mandates. And again, it would push
Yeah.
us to a place where you would have to use tools. And we don't want to see high interest rates. We don't want to see
Who's
limits
we?
on monetary policy.
You mean you?
But that's where it would go if we leave it up to other entities like the Federal Reserve.
Yeah, okay, straw man.
confront this
But if we go down this
in
slippery
Congress.
slope, everything's
You
going
can
to
look
burn
at how
down and
states have
everyone's
done
going to
well and
die.
how states have done
We
poorly.
thought
We don't
about
have
that
to
and we
reinvent
know
the
it's
wheel.
true.
You can
First
just
of
look at a few
all,
of the states
no.
who've done it
Second of
right.
all,
Georgia
who's we?
probably has the lowest unemployment.
Oh, yeah, hold up a piece of
4.5%.
paper, Donald
They
Trump.
were the first state to open. They took a
Point
lot
to
of
something no one
criticism,
can
just like
fucking see.
Florida, when they opened their
As
economy early.
validation.
Some said, "Oh, everybody's going to die." The
Oh,
only
my Lord.
problem is
Yeah.
when you look at the
Anyways.
states that stayed mostly
Yeah.
closed, they were the states actually that had the higher COVID death rates. And right now, to this day, just looking at recent
Maybe they
numbers on the
closed
7-day average of
because
COVID,
they were having higher death
Georgia,
rates.
14 per 100,000 cases a day.
Yeah.
New York, 36 per 100,000, almost triple Georgia. Georgia's fully open. New York is still mostly closed. Broadway's not even going to open till September.
Yeah.
There's absolutely
Georgia
no reason for that.
is how
They should
big?
be open
New York
today.
City
They
is
could be
how
open
small?
today. Schools should have been open months ago. All the scientists,
No,
we've had
they're
people sit in the very
equal.
chair you're sitting
Completely
in,
equal.
including Dr. Fauci, say under oath, schools should have been
Oh
open
my
months
God.
ago. And actually, you're doing
It's all good.
long-term damage to the kids by not reopening schools. This isn't something that the Federal Reserve chair has anything to do with. It's policy.
I don't care.
Policy of local governments that are hurting their economies and their people.
I don't
and
care about
especially the
chirping.
children that are paying a big price. This is what's got to end.
I do
We
like
need
the
to focus on
hypocrisy,
getting the
though.
economy
It-
fully
it
reopened, on getting kids
chuckles
back
me on the
in
inside.
classroom. And while we're doing that, we surely ought to be addressing the origins of COVID-19.
Oh my
Not a
God, he's
month
going
from
back.
Now. It should have been months and months ago when we started calling for it, because nobody should have to sit here and go, why did it happen? Why did this calamity?
Because
death,
the economic guy's going to know what the fuck
people's whole
happened.
livelihood's gone away. Suicide
J
rates,
Pow
we didn't
knows
talk about
knows
that
the
today.
secrets.
Suicide rates, drug overdoses, all off the charts.
Yeah,
because
because
of what we
mental health
through
went
in
down the
last year, and
drain.
yet
Guess
not
what?
a single hearing in
Maybe
over
it's
a year
because they had to
on the
work for
origins of
poor
COVID-19. So hopefully we can get back to focusing
minimum
on
wage,
the very policies
and they had to
that will
struggle
help us
to
get through
figure
this the
out
right
how
way,
to exist,
so that
and that
it
caused
doesn't
them
end up in
stress.
your lap,
And when
things
humans get
end up
stressed,
having to
they tend to
be
off themselves
abruptly
and do drugs.
changed to the
Jesus,
point
it's
where
almost
it
like
actually
if we
harms
pay them
your
not to
families
work,
even
we
worse
would
than
solve
they've
that
already
problem.
gone.
Oh man, I
Because
just
we've
solved
seen
it.
so many things that are happening, like all
You
of
can't
this
have it both
inflation across
ways.
the board, that shouldn't be
Oh, this
happening
guy's
right
retarded.
now. We shouldn't be seeing all this inflation that are brought on by President Biden's policies and his overreaction
definitely
to something
can.
where the science, in fact, one of the things we've seen is a whole lot
57.90.
of political science being practiced instead of medical science. So hopefully we can
Oh, and now he's
common
just going on
sense
about wrong
and
things.
the science that shows us where we should be going, when instead we're seeing a whole lot
A lot of straw
actions
manning
that are
here,
devastating
false
to people
equivalencies.
when they shouldn't be going through some of this pain. So let's focus on
Man,
getting things
I should be
open
a
the right
senator
way,
and just be like,
following that science,
I
and
yield
doing
my
it,
time.
again, not reinvent
I want
the wheel.
that
Go look at the
crazy,
states that have
angry
done it
black
right.
lady.
Many states have gotten it right.
That lady was a
Many
beast.
states have gotten it wrong, and still
Yes
to this day are doing
or
it wrong.
no.
Let's not have the federal government continue to do
Shoot
it
him
the
a new
wrong
one.
way by making things worse. With that, I would yield back, Mr. Chairman.
She was angry.
I thank the ranking member for yielding back.
5675.
I want to close by thanking Chair Powell for his testimony today.
Wow, he didn't really give much.
Appreciate the opportunity to discuss
That was the whole
lessons
thing.
learned
57.
from actions that the Fed took during the
56.
pandemic to support our economy, the Fed's current outlook
FOC.
as our economy recovers, and the action needed.
I love how his
to
closing
ensure a
remarks
strong,
were written
sustainable,
yesterday,
and equitable economic future.
and so they sound so out of place.
Today's hearing has made clear that the Fed must improve its crisis response tools to ensure that communities, small businesses, and workers, not just large corporations, receive support during emergencies. The Fed's pandemic relief efforts,
They didn't even talk
while
about half this
innovative
stuff.
and well-intentioned, were often too little too late
No.
and did not have the impact they could have had to bolster the economy. The Fed must learn from this experience to
Yeah.
improve on these responses.
Yeah, he didn't even talk about these things.
Future crises. The good news is that thanks to smart and bold economic policy by Congress and the Fed alike, our economy is recovering swiftly. The American Rescue Plan is delivering desperately needed relief that is supporting a broad-based economy or recovery. Since March, the economy has been adding an average of 540,000 jobs.
All right, we don't need the rest of that. Oh my God, he's going to ramble. Okay, gone. Woof. Yeah, because that's what he said in his opening statements, is that we need these things because my underserviced constituencies are struggling. And then his final remarks are basically talking about the same thing in the opening remarks without anything Jay Powell said. Jesus. That was... Yeah, it's good to hear, though, because what he says has an impact on the market. Even if the senators, say dumb shit, but look at the reaction to the market, right? They were happy with that considerably. Everyone loved it. So that's good. That will set us off for multiple good days. And when the market goes up, we go up. So that's good for us. So Jay Powell did well there. But geez. Oh, those Republicans. I don't know if the second guy with the airborne was, but judging by his tone, fuck. Not that the Democrats, not that they're doing much better. They're very passive and, dead. But I'll take dead and stupid and pandering over aggressive and, I wouldn't say willfully twisting, but pretty much willfully twisting. Although that old lady, the crypt keeper there, she wasn't too bad. She at least got the talking points out that needed to be said. But they were hardly, important. But I guess, part of the politics is making sure the message gets out there. So if no one asks, no one hears. But if you had any brain cells, you should know what what Jay Powell is going to say. But I guess, yeah, you need it as a matter of record, I guess. So it had to be said, I guess. Anyways, so not bad. Good response. So he's not freaking out. He's got a calm, cool hand. He doesn't see any problem. He understands that the interest rates and the stagflation, but he's seeing the stagflation as temporary. It's just due to the upset of a closed economy becoming an open economy, which not bad, Most times this happens, the country destabilizes and the USSR goes under. China has an economic and revolutionary upheaval. What happened in Europe? They went and decapitated a bunch of people. They overthrew a couple kings. And the church, I guess, got kicked out of a few places. Yeah, I think that's when Europe went through their closed economies to global trade. That's pretty much what happened. Yeah, they had a huge destabilization because you can't lie to the people anymore. You can't, as soon as the printing press came out, same thing, people became educated. So it definitely, whenever you lock something down and then you open it up, there's a huge destabilizing factor. So pretty good. Now, the states didn't really fully lock down everywhere. So that helped at the expense of, human lives. But, I guess if, from a government standpoint, dead people are actually beneficial as long as they're not young. Dead old people is like the best thing for government. If all old people just died, just gone, no problem. Everything's better. And if kids magically just grew up to like 18 years old with intelligence of an 18-year-old instantly, also good. Because babies and children and all that are problematic too for a government. But you can't go around offing your old people, right? Nor can you go around and, depopulating your country, because you need population and you need expert old people, right? So, anyways, but from a government standpoint, a virus that kills old people isn't really top on the list of worries, right? But yeah. Anyways, interesting layout. Yeah, because Europe got hit hard. Canada took a $3 or $4 billion loss. They think it was like 3.2 or 2.3 trillion dollars got wiped from the global economy due to COVID, the slowdowns and all that sort of stuff. So of course that's going to be a speed bump when we come back, right? But people didn't spend a lot. A lot of people saved. Most governments printed money, so they artificially kept the economies alive by printing money. So we're going to have to get through that. But I think overall, and JPOW is basically saying what I think, it's just going to be a temporary burn through when we go from closed to open, or over wealth and low demand to high demand, no wealth, which is, ultimately what you want. You want people somewhat poor with lots of things to buy, and then they buy until they stay poor, versus having too much money and nothing to buy, or having no money and having nothing to buy, which is horrible. You go into hyperinflation. And if you have too much money and too many things to buy, then the prices go down, and generally it equilibriums because the money transfers from the wealthy to the suppliers, and then the cycle, grows the country. Pending people don't hoard money for some reason, like a war or a famine or, I don't know, collapse of the economy, stock market route, right? So anyways, interesting. It was good to at least hear it. Much better than whatever that first one we watched was. But we'll see how it rolls. But at least the market took it pretty well. The Dow went right up, S&P went up, NASDAQ went up. So that should mean the rest of the week should be green for us. Maybe even into next week. So that's good. Yeah, backstop. That's the problem. Oh, yeah. Well, it's definitely how to put this. Yeah, I was going back to the ancient Greeks, right? So if 30% of your population thinks the earth is flat and geography doesn't exist, and, conspiracy theories are going rampant, those are the people you're going to elect, right? And then you get the person that says, well, can we just shift the magnetic fields of the earth to change climate? Like, that's the byproduct, right? If that's what the Greeks 4,000 years ago basically said, holy shit, look out. 4,000 years later, here we are. Now, in fairness, though, this is hardly the worst form of government ever. You've had Roman people that thought, you have to kill off half the population to a sun god. You have kings and queens that think the weirdest, dumbest shit and enforce it upon people, right? So even though you still have dumb people in leadership positions, at least they're not, absolute rule, right? So you don't have a crazy mad king, which we can find many through history. Nero, the one that came before Charles, I believe, in England. I guess France had some shitty ass kings too. I can't really name. I don't know which Louis sucked. But point being, you could always do worse. The czars, Rasputin, although he was just an advisor. But again, leadership position. Technically Stalin, that guy was brutal. Any junta from Burmese to Laos. Yeah. And the old Chinese kings weren't that great. Liu Bei, how many people did he friggin' kill? Geez, like putting people in the wall. The Great Wall of China is filled with bodies. It's like, yeah, you could do a lot worse. But, you figure by this day and age, though, you could smarten up a bit
especially if you're going into politics. Where back then, it was more populist leaders, whoever was the strongest got to wield power, right? But anyways, you could always do worse is the moral of the story that I'm trying to paint here. It can always get worse. Yeah. So, but none of this matters, as long as they don't close down the economy or set fire to America. Oh, I didn't put my bet in. Shit. I'll abide by the rules and not put a bet in. Yes. Yeah. You don't have to wield actual power. You just have to wield the concept of power. Because power doesn't have to be force, right? It can be fear. It can be economic, like Germany does. So Germany now is in an economic powerhouse of the EU, right? So they're wielding power through economic means versus military means, aka 1 and 2. And America is wielding power through essentially modern slavery and breaking rules whenever possible and having a Wild West market. And that's making them, there is some military projection there, right? Protecting their interests, shoring up some oil here and there, destabilizing a country here and there kind of deal. But that all aside, what really drives America is consumption. It's people having just enough money to live and then just enough money to buy stuff. And then they buy stuff so other people can have jobs selling this stuff. And then that gives them money to buy stuff from the other guy who has a job. So you're basically just trading stuff back and forth, right? And then the people on top take a cut and hoard, crazy amounts of money because you forget or don't want to tax them. But that's the US style economy, right? I really don't know where France and Britain and all their economies are anymore. Previously, about in the 1990s, they were more what I would consider normal, but things have changed greatly. But their idea was that you would have, the producers make stuff, and then you have farmers who feed the cities, and then the farmers get paid by the workers who, pay them a portion of money so that they don't have to farm all day. They can go and do service jobs. So then they go do a service for you and take money from you for their service, like making a window or a door, manufacturing, or painting your house or whatever. So then they get money and they take that money home to purchase food and goods from the other people that do service, right? But now that all the manufacturing basically comes out of China and all the products basically come out of China, now the people that are the salesmen and the marketeers and the marketplace, like the Amazons and whatever, they suck all that life out of the economy because it's no longer me, the factory, or me, the salesman. It's a foreign entity and it's profiteers, and the money just floats out of the country. And then I get a little bit of it because I might be helping that process because I work at the warehouse, or I'm the one that's importing and selling stuff via Amazon. But that's one person generally doing the work of 200 plus formerly paid employees, right? And so everything gets cheaper because there's less hands in the pot, but that pot is no longer in the country, and the one hand only gets 10% when he would have gotten 100 or 80 or 70%, right? And his workers got the other 30. So anyways, it's a very complicated world we live in now economically, because you have this idea of a service industry, but then everyone's just patting each other on the back, but there's no wealth creation. You're just shuffling around the money, right? And the only people that are really arguably getting the money are the people that are producing raw materials into objects and selling the objects. And then it's selling software, selling, apples, selling a toy, right? But then the service industry, you're selling people, ideas, a workforce, right? So human capital becomes a thing that you start selling people like commodities, right? So it's getting really wish-washy because we're trying to find new ways to generate money, but we're basically running out of ways to pat each other on the back. And so we're kind of going around in circles, and it works. It still runs, but it's very subjective to breakdown, because if one person decides they're not going to share the money, right? They're just going to stop the cycle. It's over. He just takes all the money and walks. And everyone else is like, but you're going to pat me. No, I'm gone. Oh, then who's going to give me money? No one. Oh, I'm screwed. And you got a problem, right? So that's why the government has to come in and then pat you on the back and pump the money in to keep you going in the circle, right? So if the government, or not the government, if big business runs with the money, or if your style of government, people start running with the money, then you have to pump money into the system to keep it going, right? Now, COVID's an artificial lockdown. You're telling everyone to stop patting each other on the backs because it's going to kill you. But of course, people need to live, right? So you have to inject the money so that everyone can just pat themselves with government dollars, basically. But of course, the rich people still hoard it, and it doesn't fix the underlying problems, right? It still doesn't fix, rock bottom wages. It doesn't fix having 3 jobs. It doesn't fix education and sociological issues, which are really people problems, not the government's problem. It's people sucking and continuing to suck. But the government puts in or contains or pushes forward the suck that creates those conditions. So yeah, it's their fault, but you put them in a situation where they had limited choices. And yeah, they could have made some better choices, but I throw you in a room with a bunch of poisonous snakes and you get bit by a snake, I still put you in that room. Yeah, you didn't do a kung fu move or shoot all the snakes or hit them with fire. That's on you. But who put you in the room in the first place, right? So yeah, and most people, if you put 1,000 people in the room, maybe a few of them will make it. They'll pull themselves up by the bootstraps, but you still put them in a dangerous situation, right? And that's really the dichotomy between American-style government and a lot of other more socialist countries, where they take the snakes away, they put you in a room with all the things to let you succeed, and then when you still shoot yourself in the face, then they patch you back up and say, try it again. Now, that's the part I kind of don't care for. I mean, you let the guy that shot himself in the face, just let him go. Stop propping them up, right? But, this style of government keeps propping them up, where the American style lets them die, right? But, again, going back from a room full of snakes, there's no point that it needs to be a vicious, competitive, death-causing environment, right? You can have a slightly padded room and let them thrive or die, right? Versus a super padded room that costs everybody a ton of money because the same idiots keep shooting themselves in the face, and patching them up costs a lot of money, right? And so that's the Canadian or the more socialist style. And so that's expensive. The American style is cheap, but one values life over the other. And you got to find a balance between the two, arguably, in my case. But anyway, so that's your quick recap on economies in a really generalized sense. But yeah, I don't know my European economies like I used to. But the general sense is, from what Jay Powell said, everything's looking good. And don't worry about the crap coming down the pipe, because it's just backed up sludge. So what that means for us, I'm thinking we're going to be green for the rest of the week. It's hard to call, though, because we're overdue for, downwards motion. But if the market's going to be exuberant, they're not going up too much. They've gone up a few points of 1%. I mean, the NASDAQ's almost up 1%. Although I'm still feeling a little more green, though. Definitely the markets are taking this well. And I think that's going to lift us. A rising tide lifts all ships. So even if we do go down, I think it's going to be muted. But I think we're going to see positivity run its course. So we're going to see the end of that negativity bleed out, and I think it's going to be a slow bleed up. Yeah. But that's not going to, stop us from going down if we want to go down. But I think it's going to start bleeding upwards instead of bleeding down. Anyways. Oh, weren't you a visionary earlier, Trent? Or did you stop being a visionary? Who was the visionary? I thought I would lose more people with my conversation. Ah, okay. He's going in for corrective eye surgery. I once was a visionary, and then I got old. Now I'm a -5 and a -20 in the right eye. He got downgraded. I'm from Standards and Poor, and we're gonna have to downgrade you from visionary to layman. Sorry, but your financials aren't checking out. Yeah. You got blinded by the light. He got wrapped up like a douche in the middle of the night. Ah, classic. Good times for everyone. So who's closest to win? It'd be my name. Nice. Going for a push. Last minute push. Brick horse. This horse is a brick. Go banana. Rick's in the back. Go brick. Your horse looks a little dead. Me? Yeah. My position's at the top of the page. I get in and out frequently. Today, twice. I'm going to get this end of day push. I think I'm going to hang in overnight because I think all JPOW is going to digest and we're going to get a push. Although realistically, we've been down opening for the last 2 days. And the high might wear off tomorrow. Triple D is at 28. Oh, actually, I want to take a look at that other one. I wonder if they came down from Psycho. Oh, fuck no. Elf is at 104. Oh my God, Elf. So they had a little resting period and they pushed again. Oh man, I'd write some puts on that. Fuck, man. Oh. Yeah, I'd write some puts on that. let it level out. Just short sell the shit out of that. Yeah. You might be able to short it. Depends if your brokerage has ALF. Yeah, just short it. I mean, do you think it's going to go up another 100% tomorrow? If it did, you'd be fucked. Yeah. Jesus, 100% ALF. Actually, I might be able to short sell. I'm going to check. It's probably too late, actually. Let's see. Yeah, it looks like it might be able to do it. I think I might short ALF tomorrow. All right. Not bad. So I went up $896 today. Yeah. Do I want to get out? I think we're going to continue up. If not, I'll bite my words. Okay, 3 minutes left. Okay. Dr. Overkill's won once before. No, Dr. Overkill used to be our previous winner. If he wins it. Oh, am I missing you, Rajesh? I don't see your name up there. Where is Rajesh? Still don't see him. What was your bet? 58, 56. Oh, okay. So this will be his then. When was that? Was that before the cutoff though? Since I don't have the timestamp. Okay, then we'll give it to him. If you're in before close. Whoa. You got a little bit closer to the cutoff. A little bit closer, Cedra. We'll give you a sympathetic win. But yeah, I need a closer to that. All right, so we're done. 9 seconds done. So 58.28. It will be the ghost of Cedra, or the living corpse god of Rajesh, I guess. 56. 56. So Dr. OK 50, 30. Yeah. 30 is closer to 50 than it is to 1, right? 30, 50. Half is 25. Yeah. So slight win to well, no, I'm giving it to Rajesh because I didn't have Cedra's in here. Even though it's contested, he did put it closer. Oh, no. Oh, no. We're going to have to duel it. There's a big oof here. Unless Cedra put his closer to 3 o'clock. Because, yeah, if you give it to me too early, I don't see it, right? But, yeah. I think Cedra can take the loss. He's a big boy. And we'll learn from this lesson. Well, the cutoff, I want it closer to 3. The cutoff is 3:30. Yeah, it was super early. So he gets at least the achievement of calling it at the beginning of the day. Yeah. Sorry, Cedra. But yeah, if your name's not on the list, you gotta let me know early. All right. Spirit Awards, exactly. Yep. Cool. Well, thank you all who came out. I'm now $928 richer, which is so much better than what I was normally. Yeah. Yeah, exactly. So we'll all see the impacts tomorrow. Let's see after hours. Slightly negative. All right. See you all tomorrow. Rinse, repeat, get bacon. Oh, what's my position? What do you mean my position, Rick? Yeah, because people aren't out of the house, Tom. It's almost like you have to leave the house to rape people. The position at the top is just my last buy-in. I buy and sell often. So I bought back in at 57.43. The second number is my buy-in. And the current price is the one on the left. So 58.27. And then my profit unrealized is the plus sign this time. The percentage is afterwards and the volume is afterwards. So that's what you're seeing there. But my overall today is $928. Well, yeah. Well, I'm holding overnight now. I'm stuck. I think I'm going to hold overnight. Is anybody else seeing a crazy like million plus buy-in at the last second? See the seconds chart? I just realized, what the hell? That's got to be a glitch. That's almost $1 million on closing. Just curious if that's coming up on anybody else's chart. All right, we lost everyone, I guess. No one's here. Crickets. Okay, I will confirm with Yahoo then. But anyways, okay, yeah. I'm getting a lot of volume here. Yeah, this is about 100. Yeah, just about $1 million. 500K. Okay, so mine's off a little, but it's still a lot. Congrats, Emil. You're semi-rich now. One day, you'll be fully rich. 2 500Ks. Oh, are you looking at seconds? That's 5-second increments. Okay, so then we're seeing it. Neat. So someone did a last-minute buy-in. Now, that might have been a margin call. So that might have been whatever was left at the end of the day. They had to burn out, right? Because the ruling starts tomorrow, right? So that would be more indicative of, and see how it didn't even move the market, right? So huge volume, it doesn't move the market because they know what they're doing, right? Could be a margin call, yeah. If it's a margin call, it would move the market generally, but it might be them covering their margin call. So they got the warning and they got to get out before the end of the day. So they tried to get out throughout the day. And then at the last minute, on their own terms, they got out at the best price possible, right? Because I guess the stock just kept going up, right? So they got pooched. Speculating, of course, right? Because if it was a real margin call, they would just dump to the market. They don't fucking care. So, but this one was, it came in with millions, but it didn't move the needle. So they were offsetting all the sells. So, interesting. Yeah, TD says 4.3 mil, eh? Jeez. All right, well, we'll see the effects of that tomorrow, or maybe even the post-market. So check the post-market before 7 o'clock and see if maybe this transpires into something interesting. Yeah, it's saying 4.32 million, yeah, on TD. Interesting. All right, well, anyways, see y'all tomorrow on the Discord, whatever. I got people to kills. You're welcome, and sorry for all the political good times freedom, but it happens. But as long as we can walk it off, it's all good. All right. Have fun. Good luck. GG, no re.